GETCRACK. Wake up, motherfucker.
Bit of weakness in the Asia equity session, down 0.3% or so at the time of asking. And one of the contributing factors, perhaps, is the underwhelming nature of the retail sales data out of China. What did you make of that series of data?
It was a terrible set of data, and it comes in the back of another underwhelming set of announcements out of China on the policy side, of where there's very high expectations and then the detail doesn't quite come through. I think that the China story continues to struggle. Now, I push back on the narrative that sometimes Guy has suggested that, the stock market there is doing terribly. The stock market there has done okay this year. Chinese stocks up about 20% this year. Hong Kong stocks up about similarly from about a year ago. Both of them up about 20%. We think that's a great year in any normal year. It's just that compared to US stock markets, compared to mega cap tech in the US, it's terribly underperformance. And the reality is it was terrible until September. All that performance has been delivered in the last few months. The data this morning emphasized how big a problem they have and how they're going to have to continue trying to address it. And even then, all they're going to do is stabilize the ship. But I think the market story can still be okay, even though the economy will not suddenly boot off into some bull market.
Mark, what's the positioning into the Fed looking like? If we get a hawkish cut, how does the market react? What does the surprise look like from the Fed?
I think there's an expectation here that the Fed has to be pretty optimistic on growth. They can't yet preempt exactly which policies will be delivered by Donald Trump. I thought, Bill Dudley's opinion piece on Friday was excellent about this, talking about the precedent back when he was the vice chair of the Fed at the same time in December 2016 after Trump had won the election, how they factored in the tax cuts because that seemed an easy one and likely, but they couldn't yet do anything on the tariffs, on the immigration or the deportations that might happen. So therefore, the outlook's likely to be optimistic from the Fed. I think there's expectation that it might be, it'll be hawkish to some extent. And therefore, I think the market's going to look through this and dismiss this. I actually think that even though I am suspicious that US exceptionalism can continue throughout 2025, you do not fight it right now. I don't think there are many major catalysts left through to the end of the year, through to 2025. Even though we've got the Fed this week, I don't think it's going to derail the story.
Mark, in the context of the United States, can you walk us through kind of the competition for trade and how that shows up in the Chinese yuan, in the Korean won, and of course the Japanese yen as well? Is there a trade-off given the geopolitical headlines we're getting from all three countries?
I mean, between them, yes, but they don't necessarily compete in overlapping goods or services too dramatically. So I think none of them want to get too out of line because they can swivel to some extent. What I think is more interesting on the trade thing that we do not know for next year, not just the level of tariffs that are imposed, but what the reaction function is around the rest of the world. There's a sign this time around that some of US's trade rivals will actually retaliate with their own tariffs, and that will be very damaging.
Economic breakdown looks like and what the servicing of debt may actually look like. How believable is this for an investor in Asia?
I think James' analysis was absolutely excellent. And I guess the summary is it's a loosening of the purse strings, but a controlled loosening of the purse strings. And I think this validates the ongoing theme that we've seen since September. It's almost 3 months in this kind of narrative now that China realizes the problem was bigger than they previously acknowledged, realizes they need to do more, have realized that markets need to be a focus of their attention and that they're going to care about what markets do and care about supporting markets, both in the property sector, on the stock market side, and on private markets. But they want to do it in a kind of a steady and controlled manner. They want a sustained, gradual, slow bull market, not some runaway repeat of 2009 or prior bazooka stimulus methods. And I think that these targets overnight very much align with that. These are good numbers, but not wildly ambitious numbers. They're just solid and positive and encouraging at the margin.
Mark, let me ask you about the fiscal stories then as we go from 2024 into 2025. It does seem that fiscal concerns of many shades, many forms are on investors' minds. Is it entirely normal and to be expected that bond markets put pressure on some countries like Germany and China to spend more and put pressure on other countries like France here in Europe and others further afield to spend less? And that's just how bond markets operate and we shouldn't be surprised. Or is there something notable in this?
I think it's interesting. I don't recall a time where fiscal themes were so dominant across so many different markets. So on one side, we've got China and Germany being pressured because they're not providing enough fiscal stimulus. And we have countries from France to Brazil to Canada to India all being pressured because of being too loose on the fiscal side. And then, of course, we don't know what's going to happen with the US because we've got commitments to cut the fiscal deficit and yet policies that don't sound like they will cut the deficit, in fact, that it might increase. So I have never remember a time when fiscal themes were so dominant across global markets, but the reactions were kind of very divergent. And I think that really this is a story of bond vigilantes by stealth. And I think it's going to be a dominant theme across markets over the next couple of months.
Mark, 15 years ago, China's major infrastructure stimulus boosted the American economy as well. Do we see a repeat of that if they continue to pump their economy? Is there a ripple effect?
There's going to be a ripple effect from the support China's providing, but not in that major way that we saw it 15 years ago. I mean, the scale of stimulus that they provided back then to the global economy was just immense. And it was at a time when the economy needed it right after the GFC. It hit an environment where assets were not overpriced, were not overvalued, and were ripe for a rebound story. It's a very different scenario now. The world is priced very bullishly elsewhere. The impetus, the ripple effect from China is going to be much smaller. Sure, it's a positive, but not too much. And more of the positive will go to Europe, not the US.
All righty, we got less than 10 minutes, about 8 minutes until the Fed releases their press release, and we're going to look at the dot plots. That's going to be the key thing, the dot plots. So 2 o'clock Eastern, okay? So less than 10 minutes, 7 minutes at this point. And then after that, we have 2:30. We're going to see what Powell says, and that's going to shake up how the market goes. But before we get to that, okay, I'm going to play these videos here for you. A couple of these videos. And I'm expecting a bullish melt up from here. Hopefully that's what's going to happen. So we'll have to see, though, what the dot plots are and what Jerome Powell says. Okay. So this is from Samantha LeDuc. I'm going to play 2 clips from her presentation last week.
Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description.
It's just too strong. We see this gamma that I'm always talking about all the time. And this is why people need to sort of at least pay attention to this. Even if you're not an option trader, the tail being the dog now and derivatives really being a big part of everything. $10 billion worth of gamma per 1%. You can't see it here. Oh, there it is. Per 1% move. So that's very supportive. We have these massive positions out there. A lot of that is going to start to burn off next week. I think I heard it was maybe the biggest expiry of all time next week. So we're going to have some massive, at least on the index level, massive positions are going to be burning off. And so that's going to sort of play into the second half. Seasonally, December can be very strong seasonally in the second half.
This is the chart that I showed last Wednesday and the Wednesday before that. And basically it's saying we're still going to get a growth rotation. And literally this is a ratio. Okay.
I remember you've been showing this for months.
Every single week. I show
what a break.
So this is a ratio IWF over IWD, growth over value, large cap. Now, if you remember the last time I was on here, I played a presentation with Tom Bowley, and he was showing you with the RRG charts with the rotation around the 4 quadrants. Okay, go back to that one. And it showed like rotation from growth, right? It was all going to the growth. And you're seeing it in a different way with this ratio right here.
Okay. Yeah, what a breakout there.
And this is what happened basically post NVIDIA in May of 2024. Again, they had a really big surge, but the point is This move from early June until early July, this is on a daily, by the way, was parabolic. And so just so happened, I happened to be doing a webinar with Craig, and it was on the 9th, and I warned, be careful. And then we had the yen carry trade come in. Oil fell, 10-year yields fell down to 3.6. We had the August 5th reflexive bounce. I was on vacation. You covered the trading room. Anyway, this is that big, huge move. And so this is what I've been talking about. I think we're going to have a rotation, or what I call that, the rally a la July 2024, summer 2024. And this is exactly what's happening. So where it stops, nobody knows. I'll start to get a little bit of a feel, but that's extended. The other chart that I showed you was...
Is that so?
Yes.
When you're concerned about MAG, Samantha, is that that's kind of a rush into these balance sheet heroes, as I like to call them, where you can really kind of safety in names like Apple, even though
Yes.
Apple was kind of slacking off today a little bit, but compared to the others, but that's kind of a flight to safety in a sense, right?
It is 100% concentration risk. So that can imply, yes, a kind of a safety. At the same time, it's a source of funds. I can see that there's net selling underneath the surface for the other guys. So the NYSE, the small caps. This is definitely not a Tom Lee rally in small caps. You know how I feel about that. but this shows me when growth is going to absolutely overtake value. Value as defined by, you can't really get going in financials or insurance or metals and mining. I don't mean gold and silver. I'm talking XME, XLE, energy, XLV, XLP, XLU, XLF, the stuff that is value in the sector rotation world. Okay, but this is clearly XLK. Semis are not taking part of this right now, right? They're trying to get up and go, but they haven't. But this is the MAG 7. So this is the one that I show on the weekly, which I've been showing since January of 2023. Remember this one? Where literally NASDAQ, this is not NASDAQ, this is just 7 stocks, and it's in a ratio, it's in a formula. And I show this every day as well because it shows the strength in MAG 7. Anyway, long story short, from July of 2023 until Q's just hit $524, we rose up 100% gain in NASDAQ 100. And it's in large part because of the cap weighting in NVIDIA and the MAG 7 plays. Actually, I would say even Avgo and Walmart, they're all part of the top 10 cap weighted in SPY. So this is broken out. Like, remember I said this was my target, the 1618 fib retracement level on a weekly, because this is what this ratio represents. It's a weekly chart. And this was the August 5th. Remember that right here? Incredible short covering rally. And then we went sideways for a while, kind of stuck in the mud. We did a little talk last week going, okay, it's kind of molasses. And then boom, things started really happening. It exploded higher and they broke through this level. So that was last week. And here we are. That's the parabola.
That's without NVIDIA, right, Samantha? That's without NVIDIA. Isn't that amazing?
Exact point. It's without Avgo. Avgo's been going sideways, semis in general, but Avgo specifically, Avgo has earnings tomorrow. If they beat, NVIDIA is going to come up, out of this 130.
So this is what's happening right now. Broadcom, that's what she called Avgo, AVGO beat, right? Last week. And then now we're finally coming back up on NVIDIA. So we're waiting on Powell. We're waiting on Powell today.
6, where it's been pinned, and the inverse is true. It'll be a sentiment tell, but the point is, with Apple all-time highs, and now Google all-time highs, and Tesla at all-time highs, and Netflix and Meta and Microsoft, oh my, we really do have the story of Goldilocks for the market in general, but it's really disguising the concentration risk, which will become unwieldy at some point.
Okay. All right. We got one more minute. Let's see how it goes here. And I'll play another clip from her. You can go to her YouTube channel. Okay. LeDuc Trading. Go over there. And remember to hit like and subscribe if you like this content. Yeah, we are at 1.18K subscribers here. And, we're still growing. We're trying to grow. And hit the Cash App for Portia. You can hit the Cash App for me, but if you want. But just give it to Portia. PORSHAJAYE. Okay, Cash App. Hit that. All right, let's see what happens. Anything going crazy right now? Let me see. Bitcoin, nothing. Anything? Okay, now we're gonna get the volatility where everyone goes nutso here. Yeah, 30 minutes of 30 minutes of BPD action on the market. Pump, dump, everything. And while we're waiting for the whole thing, let me talk about sound. Sound is up 24% at the peak today. So if you're still in sound, yeah, you probably should keep on selling whatever you have left. I think it's stretched a bit too far. Let me put the chart up. Yeah, it's a bit stretched too far here. Because yesterday we touched like the resistance or support, I mean, at 18, and we bounced off of there. I don't know what news it was. Could be anything, right? Okay, we're gonna watch what the Nasdaq's doing here. His first reaction is to go down. Okay, let's see what happens when the speech starts in 29 minutes. Let me see what gold's doing. Actually, I have to watch what gold's doing. Gold's moving down. Okay. So I'm going to watch gold. Yeah, and bonds too. Yeah, you got to watch both of those. Gold and bonds. Bonds right now with the TLT, long duration treasuries, has been plumbing these bottoms right now at 90. So we'll have to see how that goes. You don't want it to get any higher than this, basically. Higher, I meaning yield. So when bond prices go down, that means yields are going up. You don't want yields to be going up any further. You don't want bonds to get too popular because that takes away money from stocks. But you want to keep it in a Goldilocks region. So staying between this 90 area for TLT, let me see, and 95 would be good. Will be good. Now, if it starts getting into 96, 97, it's probably still okay. But yeah, once it starts climbing to 99 and all that, yeah, it's probably bad news. Yeah, probably. You don't want it to get too popular. So there's always like a Goldilocks zone for dollar, like DXY. You look at DXY is the US dollar. Yeah, you don't like this. Don't want to see this. Dollar's popping right now. No, I don't want to see you at 108 again. You better go back down. So there's always a region here. I think between 100 and 103 would be very good. That's where you want it to be. Not too strong, not too weak. Okay. That's the game here. I don't think you want to see this back. So that's probably going to be after Jerome Powell talks and then the Bank of Japan tomorrow night when they start talking. Yeah, that will be where you want to keep this thing. You want to keep a lid on the US dollar. Okay. Don't want this thing to be too strong here. All right. Going back to see Bitcoin. See what Bitcoin's doing. Yeah. So I started drawing this rectangle area, this range, because once I saw this thing here, this move on Monday, big red candle there, and then again on Tuesday, it's fighting still in that range again, and then after that, it just fell because you see weakness here, and then once it hits that bottom of that box, it drops. So now I can say that this area, when it goes through it, will have trouble, but it's going to be very easy for it to drop back through it. So what you want to see, if you're bullish on an altcoin season, you want to see this now stay above 108,000. That's probably what you want to see. Okay. And then you can gamble on H bar and all that stuff. So if you look at the banner, I changed the rankings of all the altcoins right now. So they've been kind of like going sideways, goofing off, and a lot of weakness came through. And Litecoin actually got pretty juiced up Sunday night on that move. So Litecoin kind of recovering. So there's still some optimism, but not yet. Not yet. Once you get that going, then you can say, okay, now we got an extra run on the altcoins with Dogecoin, H bar, Cardano, all that stuff. That's when it starts really going. Okay, I don't trade these things myself, but I'm just telling you, that's what I see. Let's look at Cardano right now. Yeah, see that? See, it's been going sideways since we got a big hit here on that big drop. I forgot what that drop was. The big drop because of, yeah, Bitcoin made up to 103K, right? And then it dropped. I think it collapsed a lot of these coins. It was just a rapid drop, and these things have been trying to recover a little bit, but they haven't gone anywhere. They've been going sideways. So once you see Bitcoin try to make a break for 108 again today or in the next couple days, that's when you'll be like, okay, I'm gonna be aggressive. Same thing with small caps and stuff like Sound. I'm probably gonna be out. I mean, this is already way too aggressive right now. Here, I'm gonna look for weak small caps. So like maybe I think Nova, like a lot of these, like a lot of these solar names. Yeah, I see this Nova. I think I have a list in the description. Yeah, Charge Point was also up 9%. So I'm looking for garbage, real garbage here. It was up 9% at one point today. So yeah, we got to get through Jerome Powell. If these things pop up, yeah, this will be a great trade into next year. And then you have these semiconductors that are more speculative. NVTS still up 8%. Oh, not bad today. Yeah, right off of that, this might be a very good one to get into. And Aher got news on Monday. I talked about it briefly. Like they had new customers for their chip testing services and equipment. Yeah, so it's been bottom feeding for a long while right here at 10 something, right? And I think like this, once it breaks out, let's see what's the next earning. Yeah, Hair has early earnings. Man, it has earnings January 9th. Man, this is a risky play. This is really risky. I don't know if I like it to go, I play into earnings, but if earnings really surprises up, maybe it can break 25. If it can finally break 25, yeah, we could revisit 50. Yeah, because it's been in this sideways, like goofing range since 2021. I've watched this thing for a while. I played it for a little bit for these little swings here, but I've never been really serious about this stock. It's kind of like really risky. Like, yeah, you could have got anywhere between $8, $10 and got out at 50, but yeah, I never put that much money into it. And so doing it again here could be worthwhile, but semiconductors is kind of stretched in terms of valuations, but these are smaller names, so maybe they'll buck the trend. They won't really follow their bigger guys, but hopefully, Avago, Broadcom, basically, at least holds it together because it dropped yesterday, right from the high of Monday. It's still dropping, and then Marvell, it has to take over a little bit. This thing, yeah, see, it's given up a lot of its gains from Monday for this one, Marvell. So those two are kind of making up for Nvidia. Nvidia has been trying. If it fails again at 140 and keeps coming back, then this is going to take longer than I would expect. But again, Jerome Powell still has not talked yet, so this all could change. So you got to watch for this, right? The QQQ can't hold. So again, watch what happens. We still got a lot of minutes here until all the things just put into place. This is going to be a volatile week. We got a lot of options to clear out, like we said, and this might, this up and down motion might not complete until Monday, just before Christmas. So only until then we'll see some kind of direction here. So we won't know which direction we want to go into New Year's. And by then that'll be the end of it. So Samantha was talking about this chart. This is what she was talking about. And if you're interested in how I calculate that, this is what I did. So this aligns with what she computed. So I did this with a spreadsheet. I just took out the 7 big names of the S&P 500. Okay, so I took out 7 of those names. These are top 7 right now that pretty much control over 30% of the U.S. stock market. Meta, basically Facebook, Tesla, Nvidia, Amazon, Google, Microsoft, Apple. There you go. So those are the names. Okay. So I'll just copy paste it, put it in the chat. If you guys want to compute it yourself, you can go to TradingView and you do it yourself, or whatever charting program you use here. This is it. I don't think you can use it for every charting program. Some charting programs you can't do. I don't know if Thinkorswim could do that, but I believe it can. But if it can't, figure it out. Just copy paste this thing. Put it. Oh yeah. This only will work for TradingView. Actually, if you're using another charting program, remove the BATS, the BATS on there, and replace it with something else. I guess you'll have to figure it out. I don't know. This will work on TradingView. I'm not sure about the others. Anyway, so this is where we're at for the Magnificent Seven. This is what's carrying the stock market right now. Okay, so now we got to wait for Jerome Powell to talk, and then we'll see what happens. And let me go to the 65-minute. Yeah, so far down to here on the 65. So let's see if it bounces off of there or not. So wait and see. See what the small caps. Yeah, this is the problem. You see, so yesterday, Tuesday, it dropped below this 232 level on the IWM. Not a good look. That's why I said, like, hold off on your buying. Yeah, and look at Sound right now. Yeah, it's pulling back. So yeah, I mean, I was done with most of my trades first week of December. Everything after that is kind of like extra bonus. Like, all the easy money was done. You should have made all your money between Halloween, Election Day, all the way through Thanksgiving, and then whatever left over into the first week of December, and that was it. Because I think most of the move has been done. But from a seasonal standpoint, I showed you that video on the previous stream we did, that seasonally, the second half of December is very good. So seasonally, yeah. Technically, yeah. You should have a very good end of December. But maybe most of that stuff has already been done. Because as you look, like MSTR here, right? Like I said, the reason I shorted it here is just before Thanksgiving, all the way like back and forth, short again, short. Every time it bounced, I just short. Every time it bounced, I short. And then after that, I didn't say nothing about it too much, right? I was more interested in probably being a long every time it dropped to 357 about here. And here, I'll show the chart on this one too. I think I drew different lines on this one. Yeah. Yeah, pretty much same lines. Yeah. So every time 357. Yeah, it's just like, it's just okay. I'll try a log. But every time it goes up, you see, it gets close to that 447 area, and then it's just like, I'm just gonna slice through butter into this red rectangle. So that's always, it's going sideways. And if you look at Coinbase, that stock very sideways. And I'll play Samantha LeDuc's like video where her options guy talks about this. How, if you see something going sideways, what you would do is that, because a lot of the volatility, so in the options market, you can bet against volatility. So many people were pricing in like, oh man, they're afraid that the next move will be a big move down or up. But you see, it's neither the case, right? It's just going sideways. And you can make money just betting against the people that are betting either really high or really low. Because you could say like, well, I think it's going sideways. So you can make money that way with options. That's the beauty of options. So that's something to consider if you're if you want to learn about options. I mean, people just keep saying like, oh, I'm buying puts, I'm buying calls, go up or down. No, I could construct a situation, a bet where I bet against it going flat. And so that's why you see this kind of action. Yes, you can still make money this way. It's been going flat since November 11th on coin. Very flat. Very flat. So yeah, I'll play that, and you guys can maybe you'll pay for her service to learn options or something, because she's probably the only person I really recommend, honestly, because she does it all. She has a very good team of people in her group, so that for a small little like organization, but you got to pay money though. You're gonna have to pay some money. So for all you guys that have a lot of money, yeah, you shouldn't be wasting your time listening to me. You should be listening to a professional. So I'm not a professional. So that's your caveat right there. I'm just giving information for free because I learned this stuff over time, right? Anyway, let's see where we got at right now. Let's see where we're at. So Bitcoin is really retesting that 103 area. All right. Let's see. And then QQQ. So I'm gonna see if this is a time to get aggressive or not. If it's not, then forget it. I'm done. I'm done for the rest of the year. I'm out. I'm just gonna be like, I'm not gonna play until you guys sort it out by New Year's. But if this thing bounces off of here, okay, I'm ready to play again. I'll play again. I'll play a little bit here. Okay, let's see. Mushroom stock isn't doing that bad. MindMed, MNMD. So this one ain't doing too bad. Huh. Okay, still up 4%. A tie. This is Peter Thiel's one, still weak. So I'm still watching this one to see if I want to get in. Now let's look at the list though. I had Sound, I had ChargePoint. I talked about Vuzi. Vuzi is a new one. I haven't talked about it really. This one's an interesting one for sure. It's kind of a meme stock, kind of like with the GameStop. Yeah, it has a nice trend here. So I'll watch it. I don't know if I want to recommend it right now, but if everything goes well. And the thing was Qubit too. I want to talk about that again. You see? So I was talking about that last stream, right? So it was after I talked about it, it jumped up 50%. And then again, it jumped up maybe 40% right now. So QUBT, so that's quantum computing. Yeah, Inc. So yeah, if you were a gambler, that was the one to be in. Man, I should listen to myself actually. Every time I recommend something, it's just like I don't even do it. Honestly, it's just like I try to keep my biases very little. I don't have any too much of a big a stake to tell you like guys like buy or sell. Yeah, I don't want to have any bias when I tell you things. It's just, and I'll tell you right away, it's like this is risky. To me, I wouldn't do this, but when you look at a chart like this, it does a range, it breaks out on Monday, then I would say like, yeah, if you're a gambler, I would play this thing. And looks like it's been working out so far if you were that trying to do that. Let's see. IONQ was another one that I'm watching because it's more of a subdued version of a lot of these. It was pretty much the company that started all this quantum computing stuff, and Google's news last week kind of like accelerated all the BS where it just broke out, because all this stuff that's happening now is so this was already moving since September, but what's happening right now this week was just it's just a repetition of last week where Google's like, oh yeah, we got quantum computing solved, blah blah blah, hype. Now everybody's chasing everything now that's quantum computing. Okay, watch this area for Bitcoin, 103,000. Okay, watch this, and then look at how it will interact between 106,000 and 107,000. All right, see how it does, and then if it can get through to 108, then we're in play. Otherwise, stay away. Like right now, I'm just like, I think, let's see what looks really good. BTDR is one I really like because it's so strong. Like on Monday, it was up 22%. I said so that was a very good trade. So I just did a small quick trade with that. Same thing with MSTR. I used the MSTX ETF. That was a quick trade. Not a big position, not anything crazy. So I just make a few thousand and I just move on. I'm not going to be getting too aggressive right now. But here, if I look at this, how it does this morning, okay, I might be interested, right? And the same thing with SMCI. It's like I'm mostly out of all like that stuff from last week, but the way it's been moving so far, it's holding that 33 level. Most of this green candle on Monday, I like this. I like what it's doing. So if it could keep pushing to 35, keep testing that, right? Try to hold on and then eventually get to 36 and hold. Then finally, you know, I would say like, yeah, get aggressive. Like we got to wait for Powell though. I got to see, and the same thing with the SOXX ETF with the semiconductors. I got to see proof. Hey, Powell, are you going to crash this market or not? Like, prove it to me. Prove it to me. Yeah, because I got to see all this stuff. Because right now, you know, I'm seeing Voozies, all this stuff, and even GameStop yesterday was popping. I feel like, yeah, there's a lot of liquidity still around, right? Because GameStop is still trying to maybe say, I'm going to get above 32. And if I see something like that and Sound, you know, the way it was moving today, it's like, dude, are you going to buy an overvalued stock just because it has new AI customers for a taco stand, a burger stand? Like that's insanity. So that's insanity. So yeah, let's see. We got about 8 more minutes. 8 more minutes until Jerome Powell starts talking. So let me play the next Samantha Leduc video here. And then we can continue on looking at certain tickers.
And Hans at the next macro to micro options power hour held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description.
So yeah, so everyone's tossing out puts and so we pulled back through that collar strike. And I said yesterday, I was talking about how there should be some support in there around 625, 630. And sure enough, we got it, but we definitely got a lot of help from CPI, which was kind of a neither here nor there kind of number. And I think the market was a little worried that it was going to come in a little bit hotter than expected, and we weren't going to get our wonderful spiked punch bowl. And so I think this kind of keeps the Fed on track, and I think it takes some of the volatility out of FOMC, right? So we can see that they're pricing in
exactly 96% chance it's a done deal. They're going to have a 25 basis point cut. And so now the market will have to worry about what they're going to do in January. But that next meeting is January 29th. There's so much time to push that off.
So much time, exactly. A lot of data to come, even a little bit of data next week, and then FOMC. But at this point, it might be a foregone conclusion. We're seeing VIX down around 1359, 1360. I think it could drop a little bit more. So, you know, we're holding on to our long puts in our December 15 puts. I've got some SVIX, some SVXY as a play on the structure, because you get that kind of beautiful contango picture in the VIX term structure. And so I think some of those plays still work, but the easy money's been made, right? So now we're down in this low vol environment where a lot of the kind of hard work has been sort of taken up by the big vol drop that we've seen since the election. And now it's just kind of the boring old option plays that pretty much are theta decay type plays. And if you want, you can definitely still capture some of these upside moves in. I mean, everything's kind of going, Tesla's going parabolic still. It just doesn't let up. It's on its highs for the day. All-time highs, I think we closed at. It's all about the porridge being warm. I always like to talk about the porridge. Everyone's going to think that's my favorite breakfast, but it is the market's favorite breakfast for sure, because we don't want things to get too extreme one way or another. And here we are, and the market's enjoying it. And I think that sets us up for potentially another run higher. I think we do have there's a lot of gamma, as we like to talk about in the options world, which is heavy duty positions between that 60.25 and 6,100 levels. If we can push through 6,100, it's hard to believe, but this can even get more parabolic. We talked about this a little bit last week. This can get even worse to the upside for the bears, basically. A melt up that would make Tom Lee blush.
But yes, we had two themes last week. One was I'm bullish, a growth rotation a la summer 2024. And you were, we could trigger a melt up that would make Tom Lee blush. here we are. The Qs are pushing. I still have 548 for the Qs because I have to keep, revising upward. Every target that I had from November of 2023, right? And then it hits, and then I have to go find a new target. And now I'm at my next target. So 548 it is for the Qs.
So let's look back at ACHR. So now it's broken out of this area here from 950, and it's almost about to hit 10. Yeah, I guess I gotta wait. I gotta wait for Jerome Powell to say something, because if it breaks out of 10, this is great. This is great stuff for this one. I don't know if it's going to be a new winner for next year, but might as well see. I also see this one, the WGS. So this is gene testing. So this is your play that you want to get into. That's way better than 23andMe. 23andMe is going bankrupt. It's been fooling around at the 79 level. This is essentially heavy resistance from when it was back here in August 2022. So this has done a V shape from $1 back up to 83. Yeah, this is quite a peculiar stock. Rarely you ever see this kind of action where it just goes down straight, goes up straight, right there. It's a recent arrival, probably an IPO at one point, so around the December 20 level, and it completely collapsed after the 2021 biotech expansion. So this thing just went right down to where the bottom is of all biotechs. But biotechs, if Jerome Powell says the right things today, might be really good for next year. I don't know. So this, as you can see, this is the biotech. So this purple magenta-ish, I guess it's magenta, XBI ETF, you see, it follows it, right? And then it follows it back down. And then only when you had this final bottom, October 2023, then you start everything go up. But now it's outperforming the XBI ETF. So this is a real winner. All it has to do is break this level here at 82. If XBI starts moving up, this thing could just shoot like crazy. Completely go nuts. So yeah, this is something I will watch for next year. That's why I put this in a trending one. Yeah, this could be something for next year. Another one is A-Labs. A-Labs IPO here. Oh, I gotta remove this thing. Delete. This is an IPO. There's not much history. I can't say what if I would recommend it or not, but the way it's trending since September, very strong. It was fun. It had funding from Intel. Intel was buying shares of it. So I don't know. Might be something that you want to see, because if next year people start selling it to take profits because of taxes, and let's say it goes from 130 down to 100 again and holds it, maybe you might go for a quick trade back up. I don't know. I'll watch it. I'll see what happens. But yeah, you got to be careful. Like Carvana, like you see it's going sideways. This thing since like $20, $4, really good stock. But I think this is going to pull back too. Like a lot of these winning stocks, Spotify. Yeah, I wouldn't trust them too. Yeah, Spotify looks terrible right now. The way it's doing this. Yeah, probably people are trying to get the heck out of there. So, yeah, watch for the New Year effect. Watch out. Okay, one more minute, and Jerome Powell starts talking, and we can see what this chart is going to do. Because it has to hold this level. Yeah, that's it. If it doesn't, bye-bye. All bets are off. So that's why I said, like, a lot of times, yeah, I'd rather just play the easy money, like doing the Donald Trump, going from not New Year's, Halloween into like December, Thanksgiving. It's just basically like, yeah, very easy. I wouldn't try to be doing this kind of crazy stuff. Because any money you make now is just like, okay, well, let's see. Everyone's speculating, speculate this, speculate that, and this is the biggest options expiration week in history, apparently. Okay, let's see. You should be starting to talk right now. I'll give you guys the link, so if you want to hear it yourself, yeah, you can go there. So I usually use Bloomberg. So Bloomberg I usually use. Let me get you the link. Blah, blah, blah. Yeah, Bloomberg usually has the best commentary, I think. Okay, let's see what happens. Okay, that's the link. So you guys can watch him talk there. And then afterwards, they'll have commentary, like probably 30 minutes after he's done talking. They'll have 30 minutes of commentary. But all you got to watch now is the chart. I don't give a crap what he says, you know? He could be coughing, sneezing, and the stock market will just pump and dump on just that. All you got to see is this thing just retrace all the way back up. If you see that, okay, good. The other thing, too, is IWM. You got to look at the Russell, okay? It better get back above 232. And then, what else? You got to look at semiconductors. And semiconductors, we got earnings today after the close. This is the last earnings of the season, Micron. So Micron, MU is the ticker symbol. Watch what happens after hours. If this thing can just break back up, SOXX above 228, okay, around this level, and get back in here, that's really nice. I mean, ideally, it'll just go back to 230, hopefully by Friday. But and if I see all these conditions meeting everything, then I'll just say, like, okay, time to be bullish. Time to just throw everything into trash and garbage, because they'll just pump like thousands of percent. XBI is here. XBI, this one, yeah. See, XBI is pretty weak. I might go aggressive on a lot of these things. Same thing with ARK, Kathy Wood stuff. Yeah, stuff like this. And so that's ARKK. ARKG is a subset of what she does with genetic testing. If I see this thing, and like I told you, right? So ARKG is the genetic testing and genetic CRISPR, like the genetic manipulation stocks. So if you know that one. And the WSG or WGS, yeah, WGS, it's already like up for something. This is kind of telling me, hey, people are not afraid. Like AAOI, another one, this optical one, it's still up 14% today. I saw it pump all day into like here. And then now you get like, oh, okay, Jerome Powell, everybody's selling off for the day, but it's still up 14%. So when you see trash stocks like this, garbage companies, speculative companies still doing well, I got to say, like, well, come on. The bears have to have something really good to make the stock market really go down at this point. Because if I see a lot of this, and VTS is still up. It's almost up. Yeah, it hasn't. Yeah, okay, it was up like 12% earlier, but still, come on. It's still up nearly 8%. So, okay. You got to really prove to me, bears. Prove it to me. Prove to me that people want to sell before the New Year's. Because otherwise, the next 2 weeks is going to be insane. So when I played that video with Gamma Squeeze, it's like, yeah, that's what's happening. There's a lot of options that got to clear out. Once those options clear out by Monday, the stock market should probably just be rising like crazy into New Year's, just because there's nobody trading anymore. Everyone's on vacation already. They're already on vacation right now. Everything is just algorithms. So if there's really nothing Powell can say to drop this thing, it'll just melt up automatically. It'll just melt up. So all this stuff will just automatically just move up. and that's why you see like QUBT. Yeah, I have, man, it's up 50%. Yeah, I don't know why I don't like do what I recommend, but okay, whatever, man. You know, you guys can make money. I'm not here to make. I'm too old for this kind of game where I'm just gonna throw money into like these risky gambling stocks. But like, come on, this is crazy. I told you guys on Monday, right, when it was $10, that was like 25 or some shit. Yeah, I don't know. I definitely should just do what I say. I don't know why I don't do that. Okay, whatever, guys. And let's look at MSTR. So this is another chart. So here, I have 430, this red line, and then I have this 383, and then I have this purple box in between, right? I'm watching this thing. So so far, I've just been like trading, right? I've just been like buying here near the 356. I was like, okay, I'll just buy as close as possible here, sell when I get close as possible up here to 448. Yes, like on Monday, yeah, right? And then all of a sudden it dipped, right? Because like I showed you, like Bitcoin's stuck right now. And it's really just stuck right here. So, and I think in the other chart, I drew like a box too. Yeah, I drew a box. Yeah, this chart I drew a box. See, because once I saw this red candle appear here, so this is what happened. Once you see this red candle, you're like, oh shoot, that's a change in character. That means it's gonna struggle. It's gonna struggle. And my target was essentially 108 to 112. That area, like between 108 and 112, will be a challenging area to get to. But once it gets to that point, let's say after today, it starts melting up. Okay, Bitcoin starts melting up with the market. Once it gets close to 112, you want to see like if there's a blow off top. So I'll play like Samantha LeDuc's like full video at the end of this after we're done here with watching the markets. She was saying that she expected 130, 135. That's really close to what I expected, 130 to 140. I don't know if it can happen into New Year's. Like it could be that we just hit 112 and it's over. It's over for Bitcoin, and everybody's just gonna run to the altcoins. Okay, so then you're just gonna spend time altcoin gambling until April, May. So the second time we're gonna get a pump is in April, May. But let's say we get to 130, 140 before New Year's. If we get there and it drops back down, then I would expect the May to June pump in crypto. It's going to happen on the back of Bitcoin trying to get to 200,000. Okay. So, but we have to go through the first quarter. We got to get through the first quarter because we got Trump, you got all this stuff happening. It's hard to say, right? Because anything in the market, you just cannot predict even a day out. Honestly, it's just like, I'm not going to be that guy that tries to predict, oh yeah, this and that's going to happen. I just do it a day at a time, guys. I just do it a day at a time. I just look at it. I go like, well, what's the probabilities this is going to happen? What's the probability that's going to happen? Is it worth it or not? That's all I can do. I mean, yeah, you just try to make the bets that work for you, that have the highest chance of winning. Otherwise, you just stay away. I'd rather not even take a bet. I'd rather not even do anything. Now, let's look at Palantir and Axon. So this is probably the stock that I would just be like always long on. But now that it's done so well this year, I think next, probably right after New Year's, January 2nd, I would probably be like, yeah, shoot, I probably have to get out. You know, honestly, like Axon's been trying to hold up here, but yeah, it took a hit on Monday. It's just like, well, is this it? Is this the end? Yeah, we'll see. Let's see what else. Yeah, ACHR, definitely the one I recommended. So I talked about that already. So go back, rewind a bit. AOI talk about, Gasolina. Yeah, UNG. So yesterday it dipped, right? I think it was 3% down. So it was down since Friday, and now it recovered. Oof. And we are past the midpoint in November. So right when we hit the bottom, it was on December 17th. So just after the midpoint of December. So probably Monday, that was it. And then now we've hit a new bottom. Yeah. So I don't know how high gasoline is going to go into January, but yeah, this will be a bet to play. So it's not too late to get in. The other thing, UNG. So that's UNG. That's the ETF for gasoline. And the other one is natural gas. I've been eyeing to short. So I've been waiting for this thing to finally say, okay, I'm done. But it's not ready yet. So probably tomorrow when we have the Henry Hub report, I'll be interested. Now let's go back to the optical stuff. AAOI. Yeah, this looks very nice. Honestly, the way it is. So if you missed out on playing this since $9, so now $9 to 45 almost. Now it's trying to hold this area above 30. So see what Powell says. But I would think like this could be still a very good play into next year. But yeah, I'm hesitant though. It is going to be a new year. Probably have to wait for the first week because they took a hit. These optical names. So Lumentum, LITE, and Coherent, COHR, kind of going sideways. But AOI being the more speculative bunch, it's easy to manipulate up and down. Yeah, this is a very good one for the more risk tolerant to trade with. So you guys that really like that risk tolerance, yeah, you probably go for that one. Okay, let's see. How's the Qs doing? Any change yet? No change. So I don't think Jerome Powell said anything to change the market reaction right now. Nothing. So yeah, I'm not going to do anything. I'm not going to push it. So whatever Jerome Powell's got to do, you better change this thing real quick. Otherwise, I'm not doing nothing right now. I'm just going to wait till Friday and Monday then. Until all the options get cleared out. So all you options guys are all fighting down here, trying to keep it in at a certain level, right? I'm not playing that game. That's why, yeah, we're triple witching too. That's the other thing I have to mention. This is the third month, okay? So the third week of the third month, triple witching. Yeah, if you look back at the October streams, I mentioned this and other things too. And I mentioned it again, like, let's see, probably 2-3 streams ago. I don't know. I already mentioned that. So yeah, I'm just waiting. I'm just going to be waiting. Very patient here. So watching this whole move here. Okay, yeah. Semiconductor back down here at the low of Tuesday. Okay, I'm still waiting. Prove to me you're going to do something. Otherwise, I'm just going to be like, Yeah, because the thing that you have to watch is the IWM gold, right? So small caps, and then you look at gold, right? And then you look at TLT bonds, the treasury. So if you see this, no go. This is not a go. I ain't buying. I ain't playing. So you just look at the market conditions that way. Very simple. It's very easy. Like you're not going to be bullish until these things turn. Otherwise everything you do is just quick trade. You just like go, okay, if I'm a bull, I'm just going to quickly get my money and get out. That's it. Until these things change. If these things start changing, then I'll really believe. The only problem is like, yeah, I see stuff like ACHR still doing good, AOI doing good, Sound SOUN doing good. I'm just like, okay, well, maybe I have to see if I'm gonna be optimistic for the last couple weeks of the year or not. So it's tough to decide. Yeah, otherwise I'm not gonna do nothing. I'd rather just stay mostly in cash, just chill, not care. I'm not gonna be in this like washing machine where everybody just goes nuts trading back and forth in options expiration, right? So this is the gambling hour, essentially. This is gambling hour. Listen to a little bit of it. I think the problem right now is that like the economy is way too strong. So good news is always bad news right now. You don't want a strong economy because that means it's gonna be he's got to fight inflation. Yeah. So yeah, that's why you see the bonds and gold dying, because if he's fighting inflation, gold is gonna die. That's just how it is. That's why I said like, yeah, don't be playing that gold stuff. See that? Oh, GDX is down like here. See? Yeah. You can definitely get a cheaper price on all the gold and silver miners. EXK, KGC. Yeah, see that? It's almost gonna break down right here. So yeah, you it's better off you can patient. And the worst thing too is, oh man, look at that. XLB. XLB is materials. So all you guys are in uranium, you're probably getting hurt right now. Yeah, see? Yeah. You already got hurt like right here last week. It broke down below 44. Yeah. So that's why you don't see me talking about it, because it's not on my scanner right here. Yeah, lithium, same thing. See? So a lot of the stuff that you see like, oh yeah, it's just like, oh man. It was like a good trade on September to October, right? And you're feeling good, but like if you held it, man, that was the wrong thing to do, because yeah, sectors will rotate. Sectors will rotate, man. Sectors will rotate. So yeah, that's why I'm just chilling right now. I'm just gonna wait and see if anything happens. But it could be an opportunity for probably, I mean, second quarter, I would probably go for commodities. Yeah, I would probably go for commodities second quarter. So we'll see. Let's see what other videos I gotta play. Yeah, I had some other ones I gotta play. There's tons of them. So I played those two. Got the Liz Ann Saunders one, Fast Money, Colin, and Tesla. Yeah, let's see what Tesla's doing right now. Actually, yeah, I'm gonna have to see if this thing is going to go back to 403, and I'll get back into this. So if you're in Tesla, yeah, you can do TSLL. TSLL, yeah. So this thing is like the 2x Tesla. If you do that, yeah, then we'll see. And then from there, then I'll see if I want to do anything with Tesla. Yeah, Vago. Probably a Vago I'll do next. So once we see that, yeah, that'll be good. Yeah. If this thing gets back down to like 200, yeah, maybe. And then we have Micron. I was talking about Micron earnings today after the close, right? So watch this one. This will probably have to decide everything for semiconductors today after Powell's done talking. Probably got about 20 more minutes of him yapping. Yeah, once he's done with that, and if this thing just pops back up, then we're done. We're over. Yeah, we're good. Because yeah, I'm still waiting for IWM to get back above 233. around there, because now right now it's just dropping into here. So yeah, 233-ish, 235 is where you need it to be. Otherwise, yeah, no go, because then you just let the options clear out into Monday, the 23rd. Okay, but let me see. I gotta play this one. Yeah, I'll just play this one while I'm waiting for this. Oh, TSLY. Yeah, there's probably like tons of them. And we got the Palantir too, right? You got the Palantir one. Shit. Yeah, that's why I said, like, if you got Palantir has fuck, what the heck was it called? Yeah, here we go. PLTU. Yeah. Well, if I see this, I'm just really like, I'm getting out of my Palantir like by next year, because it's like, dude, bruh. I know this is my favorite one. Like, dude. I've been man, I held this since what? $7 or yeah, maybe I'm done. Maybe I'm done with Palantir. I don't know. Maybe it's over. It's over. I mean, Carvana's already like trying to die, right? Man. Shoot. It's sad to say goodbye to some long ones, but you got to say goodbye eventually. Otherwise, you don't make no profits. You got to be like, oh, I'm done. I'm finished. I mean, even the Sprouts market, like SFM, right? Sprouts Farmers Market, it's starting to weaken. So a lot of these guys that used to be like, man, this beautiful thing is so good. Sprouts Farmers Market. Now you see like this. It's rarely you see a week that has a deep red candle. Like most of the weeks was like barely a red candle, right? Like, come on, the last time you had it was like a negative 4.59% back in May 2024. And another one, 5%, negative 5% on September 24. But it's rare. And now you see this one where it's negative 7. Bro. So to me, a lot of stocks that have been doing very well, watch them carefully, because I think people are itching to sell them. So a lot of these winners here for these past couple years, it's just, yeah, it's a sea change time. People are getting out. It's already bad for Samsara. I forgot if it was Tropes or somebody else was telling me to watch this thing. It's like, yeah, I've watched this thing before. I'm near one. Like, I walk by some of the, like, I think one of their newest headquarters or buildings or whatever, and it's like, okay, it doesn't have much history. It's been going up pretty well, but yeah, again, getting to the New Year's, I probably be like kind of like Spotify, right? It's just, yeah, a lot of these winners. Oh man, you come to the New Year's, people are trying to sell. I don't know. I would not be too ambitious, but hey, I'm gonna keep watching. So let's see what else we got. Oh, look, I talked about that. Charge point I talked about. UNG. Yeah, I think I've talked about most of them. Yeah, I think I've talked about most of them. Let me see what HIMS is doing. Is this good time to get back in? Yeah, down 5%. No. Yeah, still not. I mean, it was trying pretty good yesterday. But yeah, still, small caps are still too weak. So I can't recommend it yet. I really can't. Yeah, I can't do any of this stuff right now. So yeah, you just gotta keep waiting. If Powell doesn't get delivered, then yeah, you gotta keep waiting until like Monday to see if it'll turn the tide. But otherwise, no. Nope. Actually, Mobileye was talked about, right, huh? Yeah, Mobileye. You see that? Now it's going back to that support level it broke out of. So that resistance now turned to support. Yeah, watch Mobileye. MBLY. I know you were looking at that, Tropes. Yes. Oh, see if it can hold 18. I might be a buyer for next year. So I'll be watching that one. Okay, let me play this some videos then for you while we wait towards the end of this. Let me see. Kind of boring videos, I guess. They're not really interesting. And then I'll play the Samantha LeDuc one because I think that's more important for you guys to study that video than these other ones.
What's going on? Why are we seeing such weakness in NVIDIA and Broadcom really gaining so much strength?
Unpack this and start off with a couple of stats. In the latest quarter, Broadcom's revenue was just over $14 billion, up 51% year on year. NVIDIA, meanwhile, posted just over $35 billion in revenue, up 94% year on year. Broadcom trades at a higher forward PE than NVIDIA, yet Broadcom is getting all of this backing from investors right now. There's a sense, I think, that investors are looking for the next NVIDIA, the company that's going to give them the outside returns riding this AI wave. So you're seeing some of that rotation happen there. But it's important to know also that Broadcom and NVIDIA are not necessarily an apples to apples comparison. NVIDIA develops GPUs, these graphics processing units that have been used to train huge AI models like those made by OpenAI. There is still no real challenger here in this space. Meanwhile, Broadcom's focus really has been on designing custom AI chips for hyperscalers, the big cloud players like Google, Amazon, or Microsoft. And while these hyperscalers still need NVIDIA chips, they're increasingly looking towards some of this custom silicon that Broadcom's designing that can be used for certain tasks or processes. These hyperscalers then sell those services through their cloud division. Now, one reason the market is excited is because of recent comments by the Broadcom CEO, Hock Tan, who said 3 hyperscale customers have developed their own AI chips on Broadcom's own platform that will be deployed over the next 3 years. And the company has received also a round of price target increases from Wall Street. All of that right now helping Broadcom's recent rally to over $1 trillion, Frank.
RT Journal Kyoshi publishing the speech from Chinese President Xi Jinping. He made this in an anti-graft meeting back in January. Now, Xi dismissed internal divisions within the ruling Communist Party as unavoidable while calling for greater efforts to instill discipline. Min Lo, our China correspondent, is here with us to talk us through this. And is it unusual that we hear about something that happened a few months back? And just give us context here.
Yeah, so he made this speech at a huddle with the CCDI, which is the anti-graft agency, the Central Commission for Party for Discipline Inspection. So it's not uncommon that the party do not publish such speeches that are made in closed-door meetings, and sometimes they publish them many months or even years after the fact. Sometimes it's used to signal certain policy priorities, and it's interesting that they are publishing it now, about a couple of weeks after that high-level military official Miao Hua was suspended from the Central Military Commission. And President Xi in that speech had said that it is important to, quote, turn the blade inward to the party to ensure party legitimacy, because he said that changes in external circumstances as well as in party membership would inevitably lead to party strife. So it's quite rare, I guess, to see or to hear an admission that there is internal conflict within the party. And it also highlights how challenging it is for President Xi to really consolidate his power, given that he has already been implementing this anti-graft campaign for over a decade. And yet we still see very high-level officials, defense ministers, the elites of the military that are being charged or investigated for corruption.
So when you do have that sort of division, possibly, how does it then have an impact on the government's ability to be effective?
Yeah, obviously the intention of this anti-graft campaign is to make the government more effective, but at the same time it does have that unintended side effect of causing some officials to be so afraid of making mistakes that they so-called lie flat, and they stop, trying to innovate or to take risks, to take measures to try to boost the economy, for example. And it looks like top leaders are aware of this. So last week they did indicate that they want to step up incentives for local party officials to innovate. But then if you're a local official, it's really quite a difficult line to really balance between keeping your head down and doing your job versus standing out and doing a good job without really knowing where the red lines are.
Okay, well, you know what China's doing. Yeah, let's see. All right, so the next ones will be, I think, Liz Ann Saunders. I got to talk about, sector rotation. And then we'll talk about some yields later. We'll see.
Look at the tape. Just how much gas is left in the tank of this bull run? Let's ask Liz Ann Saunders, who joins us now. She is Schwab's chief market strategist. Welcome back. Nice to see you.
Nice to see you too, Scott. Thanks.
You know, I cite the fact that people are pretty bullish. It's Bank of America and their fund manager survey today, which cited super bullish sentiment, record low allocation to cash, record high allocation to stocks, and a 3-year high in global risk appetite. What does that tell you, if anything, on where you think we might go here over this last stretch of 24 and making the turn into 25?
Well, you know, Scott, it's among many sentiment indicators that do show a decent amount of froth in the market. And it's both on the attitudinal side of things, so survey-based data, as well as on the behavioral side. You mentioned a number of see it in fund flows, particularly huge inflows into large cap equity ETFs. You're certainly seeing a lot of speculation and froth in pockets of the market, whether it's in the, art world or crypto world or, leveraged single stock ETFs. So I do worry about that as a backdrop. But even when you're at extremes of sentiment in one direction or another, it is all else equal a contrarian indicator, but it's not a very good timing tool. So you can sort of put it in your back pocket as something to be mindful of to the extent that there's a negative catalyst. It does mean that there's sort of money and attitudes on one side of the boat, but in and of itself, it doesn't suggest a downturn. I think these rotations under the surface are likely to continue to characterize the market.
But I mean, what do you think's a more important signal right now? The fact that the NASDAQ and mega cap have distanced themselves from the rest of the market, or the fact that breadth in the market, you've had more down stocks than up stocks for long stretches here. What's more important, do you think, on the direction from here?
Well, I think we could be setting up, if this persists, for something that looks like the first half of 2024, which at the index level, you would have thought nothing to see here, nothing to worry about, successive new highs, but a lot more churn and weakness under the surface. Even as we sit right now, the average maximum drawdown at the average member level for the NASDAQ is almost 50%. It's 21% for the S&P 500. It's been somewhat masked by the strength of these names. Fast forward to call it the mid-July to early November period of time, you saw that traditional improvement in breadth where you saw participation down the cap spectrum, you saw equal weight do better. But now we've got that rotation back into the Magnificent Seven. That will, and if it continues, support cap-weighted indexes and make it look like the market is fine. But it could, again, like the first half of this year, mask some of the churn under the surface. And that wouldn't be a big surprise to us as we head into 2025.
I mean, growth is crushing value, certainly lately. I mean, it's not even close. And it does have some saying essentially what you might be suggesting as well, that you may be back to a time where tech is the most of the game in town. And who knows how long that might last.
I would say tech with a lowercase t. I think we often sort of conflate the words tech and tech, lowercase, uppercase, with the technology sector, which doesn't house all of the Magnificent Seven, of course. And in fact, the Amazon and Tesla are actually in consumer discretionary. You've got communication services in there. So if you're talking, mega cap tech related kind of names, I think we're going to continue to see a decent amount of action there, not on a consistent basis, but as you and I have talked about on this program many times before, Scott, part of these sector rotations that kicked in earnest in the mid-July period of time, that wasn't a period where that went from Mag 7 leadership to some other area and it stuck. It initially went to the interest sensitive areas. Financials got a boost. Then it went into small caps. You saw it in industrials and some other cyclical areas. And all along, we were saying there are going to be times where those rotations take the money right back into the mega cap tech and related type names, Magnificent Seven, to, use the popular moniker. And I think those rotations could continue. But you're right. In a growth constrained macro backdrop, I think there is a premium being placed on the ability to grow earnings. I think the difference last year into next year is that level mattered a lot last year. The level of profitability, the strength, good versus bad in the balance sheet. Now I think it's rate of change that matters a bit more as we look ahead into 2025. So we also have that ability to catch kind of the improvement stories, not just good versus bad. I think it's a better or worse aspect to 2025 that maybe matters a little bit more than good versus bad.
All right, then we're going to play some bonds. So wait here. I think it's got about 10, 15 more minutes, and Powell starts talking. And then I'm going to play the rest of Samantha LeDuc's little, I think I'm going to play the whole thing, and you guys can figure it out. See, so I'm going to do one here.
Out with a note today saying the benchmark 10-year yield could climb as high as 6%, a level last hit in the year 2000. Strategists outlining a number of fiscal risks at play, including a growing federal deficit fueled by Trump tax cuts, plus potential tariffs and immigration policies that could put even more pressure on prices. Rates have been climbing already this month, topping 4.4% at their highs today. But if T. Rowe Price is right,
Price is right, yeah.
Oh, yeah,
That's
I think that's why I said it.
Yeah.
What could it mean for stocks? The major indices, well, down today, they're still trading close to records. Even the Dow logging its longest losing streak in more than 4 decades. It's less than 4% off its intraday high. Can the strength continue if yields push higher, Tim?
Well, a little higher, yeah. And remember, growth scare would push yields lower, and that's not good for the equity market. Where were we in September and October? You had a couple bad payroll numbers. People were starting to question what was going on with the economy, and that's a lot worse for equities to me than a 10-year that could go to 5%. And if it goes to 5, I mean, who knows what the psychological level is? There's a lot of empirical data, and there's certainly a lot of history attached to when 6% was. And we were a very different rate environment back in 2000. By the way, 2000 is also where we were the last time cash levels were this low on the equity market. So if you listen to Merrill Lynch, Bank of America, and their fund manager survey, we're at a sell signal in terms of equities, in terms of cash levels are low. Optimism is high. So I'm not suggesting it's 2000, both from a rates environment or necessarily an equity environment, but it does tell you where we are. And I think from an economic perspective, with the Fed on deck tomorrow, you've got BOJ this week, you've got a lot of CPI data. I think it's a case where we want to see yields hold this level. I think I'd be very comfortable as an equity investor with yields up closer to 5%. Again, given the environment where we know the next administration has discussed dynamics that I think will be, frankly, yield friendly, meaning yields higher friendly. Go back to July of 2020, and you can make an argument that rates have been slowly moving higher on the 10-year. There's been some fits and starts. Carter would tell you they've done nothing in 3 years. I think that 5-year chart tells you there's upward pressure.
5% on the 10-year, that's fairly consensus out there. I mean, ING has that 5% mark, JP Morgan Asset Management. I mean, a number of shops out there have 5% baked in for next year. But I guess the question is, the T. Rowe note indicated a lot of sort of technical reasons why the 10-year would go to, including other countries not wanting to buy our treasuries. And so does that matter that it's those factors that would drive yields higher?
Well, you'd want yields to be higher because the economy is doing well, right? Obviously, you want that, and that's the scenario you're talking about, where yields are higher because things are sort of, the economy's growing and growing nicely. That 6% number, though, I think that starts to get into a bad spiral, right? And if the government needs to fund itself at 6, right? We're at, I think our average debt now is maybe 3.3. At me if that's materially wrong, but that's a very significant shift. So that they aren't talking about 6 right away, sort of a stop at 5 and then it could move to 6. That 6 to me is a scary scenario, but I think the market can handle 5 if it's sort of for the right reasons, not Japan pulling back, China pulling back as buyers of U.S. debt.
Yeah. Julie?
Yeah, I agree. For the right reasons is the really important distinction to make. If you think about where we are right now, there's a lot of enthusiasm, obviously, in the equity markets, and part of it was driven by lower rates, but part of it too is just the strength of the fundamentals. I think I have concerns for particularly what we see in small cap. A lot of these smaller businesses are impacted by higher rates. Many of them are not able to finance on, long-term debt. They are typically on variable rate debts with their banks, and so that could be a real headwind for small cap. And so I think overall, it's not a terrible thing if we're at 5%, but it will hurt some businesses for sure.
Our next guest doesn't think the 10-year yield will head much higher from current levels. Subhadra Rajappa is the head of U.S. rate strategy for Societe Generale. Great to have you with us, Subhadra. So by end of the year, you don't expect 5%. How about for 2025?
Unlikely.
Okay.
Because I think that what we're going to be focused on, at least for the early part of the year, is tariffs and immigration and the inflationary impact of that. So if the Fed keeps policy on hold for a lot longer or doesn't deliver as many cuts, then what you're going to see is perhaps even a rally in the long end of the yield curve, because tariffs could be inflationary, and in some respects, if you look at that as a tax on consumers, you could see that being translating into lower growth and lower yields in the back end. So it might seem like a contrarian view, but there's definitely a case to be made that the yield curve could actually even flatten from here.
Mm-hmm. Implicit in that forecast, though, is the assumption that the Fed will adjust policy according to what is done by the president, what is done legislatively, and that there is that sort of reaction when so many people have said, tariffs are a one-off, they're going to look through that. You don't agree. They will adjust according to what is going on around them?
Yeah, I mean, I think it is a one-off in the sense that you're going to see a step up in prices on the items that are being tariffed. It's not something that's going to have a multi-year impact. But that said, I think that, the Fed doesn't have enough clarity on what's to come next year. So they're going to wait and see how things progress and then act accordingly. So you're going to see a little bit of a lag, and that's why I think in some respects, if you look at the summary of economic projections, I'm not sure how much real information there is going to be in tomorrow's update, because they don't really know a lot about what's coming up on the policy side.
So let me ask you, how much invisible pressure is there on the Fed to cut to cut Fed funds rates, because so much of the deficit is funded by these shorter term rates?
Probably very little. I mean, the Fed and the Treasury work, separately. And the Fed, of course, has a dual mandate. They're going to be concerned about inflation as well as employment. The Treasury is the one that decides how they're going to issue. The Janet Yellen Treasury has favored more bills and hasn't really termed out the debt. We've heard from Bessent that he might be more amenable to terming out the debt. But the concern, as you were talking about earlier, is that if you do see an increase in long end coupon supply, that you could see that long end start to rise. You could see that term premium start to build up on the yield curve. You really don't want Treasury yields going to 5-6% in short order. I mean, if it goes up gradually from here, it's one thing. But if there's sort of markets are spooked and you see this sort of sell off at the long end because of more issuance, that's something that I think you're going to have an impact on risky assets, and you're going to see a tightening of financial conditions.
So in that context, Subhadra, when I think about U.S. rates, at times we've been somewhat a function of what's been going on globally. I was of the view that the BOJ was going to be in some way indirectly a driver of U.S. rates. In other words, if rates in Japan go higher, I think rates in the U.S. have to go higher. Any thoughts on this? Because, again, central bank policy also is becoming somewhat divergent. I mean, Canada, their inflation rate slipped below the central bank's target. You can make an argument the ECB is going to be cutting more aggressively than the U.S. Central banks around the world are not aligned anymore, and that will affect rates.
Yeah, and you are going to see these divergences between all the different countries' bonds. For instance, right now, if you look at what 10-year treasuries are versus 10-year bonds, you're seeing that spread widen out quite meaningfully because the market's priced in a lot more cuts for the ECB versus the Fed. It's the same with the BOJ, but the interesting thing about the BOJ is that the more they hike rates, the more I should say, less the demand for treasuries, because a lot of these domestic buyers are going to be buying JGBs as opposed to buying treasuries. So the demand dynamic really changes. Again, that could be something that could put some pressure on term premium, because we do rely on foreign demand for treasuries to keep treasury yields lower.
Right. Specifically for the Fed, what is the one thing you'll be looking for, either in the SEP or in the press conference, or any sort of, what is the one data point, or what is the one question that you would want answered?
I'd like to see what their projections are for inflation for next year, and how they square the circle on how many cuts they have penciled in. I mean, again, there's probably not going to be a lot of informational value because they don't know how things are going to play out next year. But that said, I think that at least gives you an initial read to recalibrate. I mean, let's say they go from 4 cuts for next year, which is what they had in the summer, in September, to 2. That leads me to believe that they're much more amenable to keep policy on hold, perhaps for a lot longer. Our personal view is that they go from 4 to 3 because it's much more gradual. They probably don't want to be seen as moving the dots too much. But that's something that I think would be more of an indication to the markets on where they're thinking on inflation and how they're likely to react if inflation is actually sticky.
All right. So, I think, yeah, he's still talking. Pretty long conference right now. Still got like probably 2, 3, 4 minutes. And let me see what's going here. Let me do this ETF flow. Okay, let me do the ETF flow one.
As good as it gets. I mean, $1 trillion in inflows, record launches. It certainly feels like maybe we're at a top, maybe we're peaking. I don't know.
No, I actually think we're just getting started. And I mean, I've been in the industry for longer than I've cared to admit, and it's always been great years. Not always been great years, but it's always been gradually evolving. But I think we've gone through evolutions, right? Passive, smart beta, fixed income, and now active. And then with all of those combined, I really think this is the start, firstly, of the active ETF growth. And I think that's really contributed to the growth this year.
We saw how passive ETFs were eating mutual funds lunch over the last couple of years. But as you point out, active ETFs having a big moment here. Who are they taking market share from? From passive ETFs or from mutual funds?
So it's really interesting, right? Like I said, I've been in the business for a while, and we've all seen that chart of the growth of passive ETFs with the mirror image of the outflows of active mutual funds, right? And we all inferred, or at least I did, that, investors want passive, right? But now the numbers are really showing us that they want the ETF wrapper. They want passive and active in the ETF wrapper. And I really think that's kind of where we're going right now.
Let's talk about this coming year. It's very possible they approve the ability for a mutual fund to just stick on an ETF share class, the way Vanguard has done for like 15 years. If that's approved, my take is that you will probably find some people switching over to the ETF, and the ETF could be used maybe to minimize capital gains for the mutual fund. But largely, I think this probably helps active ETFs also. What do you say?
Yeah, if it's approved, I think it'll definitely accelerate the launches. I think even if it's not approved, the active ETF launches, in my opinion, are probably set to accelerate anyway. I think it's just going to give it another boost. It's going to be if the share classes are approved, I think it's going to be the best case for all worlds.
So it's not just 401ks or anything like that. We're also talking about potentially endowments doing more of the same. UConn, for instance, has now been, we have a Bloomberg story on it about how they are steadily decreasing their exposure to hedge funds and instead choosing to put some of that money into buffer ETFs, which of course uses options to minimize losses, but also cap the upside gains. How big of a moment is that?
I think it's a huge moment, right? But I think it's something to be expected, right? It's what the ETFs are revered for. They're revered for cost efficiency, then they're revered for liquidity, and they're revered for ease of use. And I think that's what we're seeing in this story. They're going away from the hedge fund, getting that same risk management strategy in the ETF wrapper at a cheaper cost with anonymity and more liquidity. So it's exactly why ETFs sort of have had that run over the past 30 years. 30 years and why I think they're going to continue to run because there's still so many 30 years and why I think they sort of have had that run over the past 30 years and why I think they're going to continue to run because there's still so many white spaces to be taken up.
Okay, and let's see. 2 more videos. Then I'll get to Samantha again. Let's see. Yeah.
Actually want to start with something we were talking about a little bit earlier, MicroStrategy. Because one big conundrum is why not just buy a Bitcoin? Why get it through something that's more levered like MicroStrategy, even if it's going to be joining the NASDAQ 100?
Well, look, what Saylor's done with MicroStrategy has been tremendous, and he's been able to utilize effectively the fixed income markets to, issue debt and acquire Bitcoin, and now achieve a 2 times premium on the NAV of the Bitcoin they're holding. The other thing is that there's a lot of investors that still, for whatever reason, can't buy Bitcoin directly, even via an ETF, and MicroStrategy has been the instrument of choice for them. So it's something that people like. I would say buyer beware in terms of being mindful of that premium. Bitcoin could continue to rally, and you could see MicroStrategy sell off and converge to NAV. But he has done an amazing job so far. I'll give him credit for that.
Outside of MicroStrategy, outside of Bitcoin, how do you feel about the prospects for other things like Ethereum? People are talking so much about this rise in Bitcoin, and I'm wondering if you just see as good opportunities anywhere else.
No, I mean, Ethereum has caught a bid here after trailing Bitcoin for a long time. It's the center of stable coins. It's the place where you go to do DeFi things. It has the most TVL from a DeFi perspective out there. The NFT market is still largely on Ethereum. There's a lot of good things to say about it, and I think it will continue to do well here for the foreseeable.
Hey, Nick, I want to talk a little bit about a strategic Bitcoin reserve. A lot of folks we've been talking to over the last few weeks think it is something that is likely going to happen under the Trump administration. You're not one of those folks. Why do you not see one happening?
It depends what we mean by strategic reserve. If we're talking about a stockpile and just holding the Bitcoin the U.S. government has already seized, unclear how much they have right now. They might be selling off some of those coins. I think we can reasonably expect that to happen. Trump's been clear on that front. If we're talking about Cynthia Lummis's bill buying 1 million Bitcoins over 5 years, acquiring more Bitcoins for the U.S. government, or even potentially moving away from the existing dollar system to a Bitcoin-backed system, I don't think that's likely. I don't see support in Congress for that. Congress would have to authorize that. I don't believe that it would be prudent, frankly, for the U.S. government to signal a move away from the dollar system, move to a commodity standard based on Bitcoin. Any other nation state, it makes sense for them to acquire Bitcoin, and they are, Bhutan, El Salvador, that's fine. The U.S. is the issuer of the global reserve currency. We shouldn't do something that would call into question our own solvency. So even though I am a Bitcoiner, and it would certainly benefit me if the U.S. government started buying Bitcoin, I'm also an American, and I don't think it would benefit anyone if we were to shake confidence in global markets by implying that the dollar is at risk.
Well, as we mentioned, Bitcoin rising to a new record for a second day in a row today, hitting $108,000 per Bitcoin. I wonder, Nick, to what extent the optimism that we've seen is about potentially a strategic reserve from the U.S. government, or other optimism with regard to President-elect Donald Trump's policies when he does take office. If we do not see a strategic Bitcoin reserve or the government starting to buy Bitcoin, do you think we're in for a correction?
Yeah, I think that's a risk factor for sure. The hardest thing about being a Bitcoiner is you're in the trade with a lot of delusional people, right? And whether it's the stock to flow theory or now the strategic reserve, which I don't think is likely to happen, I think there is a bit of a risk that these elements are being priced in. And when there's disillusionment, it sells off.
So he's talking about the stock to flow. Okay, if you don't know Bitcoin, yeah, there's a stock to flow theory. He's calling them delusional. Yeah, you should look it up. Look up stock to flow. Stock to flow. Okay, stock to flow. Yeah, look up that theory. That's a pretty interesting one. Yeah.
Off. All that said, I said before the election I thought it would hit 100,000 if Trump was elected. It has done that. Trump himself, he sees vindication in market action I think he told Axios that he wants it to be 150K. You can fact check me if I'm wrong. Trump wants Bitcoin to go up to vindicate his pro-Bitcoin stance. He's a markets-driven guy. The shackles have come off this industry. It's a new era in Washington for the world. So the rally, I think, does have legs. I think it has fundamental soundness to it. But at the same time, we should be cautious of getting overly bullish about things like the reserve.
What is your price target then, Nick, for the end of next year? Because realistically, people have been buying the rumor. He's not at the helm quite yet. He's not able to put those new measures into place. The new regulators don't take charge yet. When they do, does that unlock a new wave?
Certainly, there'll be immense changes in Washington day one. Debanking will end. SAB 121 will end. The biggest banks in the U.S. will be able to custody Bitcoin and crypto assets. The SEC will end its hostile posture. All these things are immensely positive for the domestic crypto industry and for Bitcoin. I think you'll see other sovereigns, maybe not the U.S., but other sovereigns come in and start acquiring Bitcoin. In terms of price action, it's hard to say. Bitcoin's an 80 vol asset. Long term, I'm looking for Bitcoin to match the market cap of gold, which would price Bitcoin at $900,000 a coin.
Nick, you mentioned some specific regulations coming down around cryptocurrency, the idea of debanking. And I'm wondering if you see potential risks ahead, if that is indeed the case. I mean, Silvergate no longer around as a result of having too much crypto. I think it's fair to say. These regulations, people would argue, are here for safety. They're here to prevent bank failures or financial institution failures. What happens during the next downturn in crypto if a lot of these financial institutions are now allowed to have more crypto on their balance sheets?
Yeah, I mean, look, Silvergate and Signature is a long story about what happened to them. They weren't really holding a lot of exposure to Bitcoin directly. They were just banking crypto clients, and they died for it. Silvergate survived that run, but then they were told by their regulators that they had to reduce their depository exposure for crypto firms to less than 15%. So that basically killed them off. I'm not advocating for banks to hold Bitcoin in their asset portfolio directly. I'd like them to be able to engage in custody for their clients, and I'd like them to be able to bank crypto firms. And I think those are risks that banks can opt into. They can, understand that they're banking a high-risk industry. So far, they've been largely prohibited from that ever since the start of 2023, what we call Operation Choke Point 2.0. I think they should be free to choose. And I don't think the regulators should be ring-fencing this industry and saying you can't serve crypto firms at all. I think that's unconstitutional, and that has to end.
Bush raising his Tesla price target to $515, writing, "We believe the Trump White House over the next 4 years will be a total game changer for the autonomous and AI story for Tesla and Musk over the coming years." Dan joins us now with quite a punchy price target. Dan, good morning. It's good to see you.
Great to be here.
Vijay Rakesh of Mizuho doing something similar this morning. He makes a different point, though, and I'd love your thoughts on this. He says the new administration's policies, repealing the consumer EV tax credit, positions Tesla better than lower EV cost structure relative to peers. How important is that piece of the puzzle?
Well, I think that's important because, again, negative for the EV industry, positive for Tesla in terms of the scale and scope. But if you look as they sort of do the sweep the leg on the EV tax credits, that's just going to give Tesla more and more of an advantage. But let's just be clear, that's the appetizer. I mean, the main event here, what we are focused on, the gold at the end of the rainbow, it's autonomous, the AI future. And I think that's where the light bulbs went off, because if you look at the Trump-Musk bromance, and as this all plays out, this is really going to be, I think, it's a poker move that I think will really be the bet for the ages when you look at Musk's bet on Trump.
The vibes are good, and it's hard to fight against them. I just got a message from a Bloomberg subscriber. I won't mention their name. I believe you know the individual, and we can talk about that in the commercial break. And this is what they say. Tesla has increased since the election by something like $700 billion in market cap, now $1.5 trillion. The business is not growing and hasn't in 2 years. Despite the hopes of full self-driving, it still doesn't work. So less regulation doesn't help it work. It's up another GM in market cap this morning, or better. The market cap of Waymo, which actually has working robo-taxis. My prediction for 25 is Tesla will lose over $1 trillion in market cap. What would you say back to that individual?
I'd say if that person was an NFL scout, they're probably negative on Tom Brady, come out of the 2000 draft, come out of Michigan. I mean, the point is look, despite all the Super Bowls, look, if you look, the Bears, they can't see AI in the spreadsheets. So when they're sitting there in hibernation mode, they don't understand this move. Autonomous is worth $1 trillion valuation to the Tesla story, and I believe now, as it all plays out, it's really just the start. I continue to view this as probably the best pure AI play out there.
Last video, okay? I'm gonna play. I think Jerome Powell's done talking. Is he done talking yet? No, he's still talking. Wow, this is probably the longest FOMC Q&A ever, man, bro. So I'm still waiting for him to shut up, so I can go by. I'm still waiting. Like, come on. How low can we go? Can we go lower? I need to see the pump. Because once this thing is done and we see the pump into like Monday, that's what I'm waiting for. Like, come on, man. Bro, you are still talking. All right. Let me just play the Samantha Luke. I think once you understand this, I'll play the whole video. So I played 2 clips. I'll just play the whole video, and then because they do a lot of options education on here now, and I think it's good. So this was from last week, okay?
Introducing the 3-part options course with Hans Albrecht. Get access for free by scanning this QR code or clicking on the link in the description.
Hey, greetings, and thank you so much for joining us. It's Macro to Micro Options Power Hour. I'm Samantha LeDuc, founder of LeDucTrading.com, and I'm joined by Hans Albrecht. You can find him at LeDucTrading.com/Hans. He's also in our Slack member workspace as one of our 10 contributors, offering up lots of options education, mentoring, and option related trades, both for alpha as well as overlay strategies for hedging. And the title of this particular talk, which we do, by the way, every Wednesday at 4 o'clock, is just, nobody wants any puts right now, right? So we're having a wonderful time if you're long the Mag 7, the Magnificent 7, or the SPY 10, in that they're doing nothing wrong, right? Apple's making all-time highs, Amazon, now Google, the quantum bug has absolutely hit and ignited that bull. Netflix, Meta, Costco, Walmart, which has been even part of the kind of concentration risk that we saw back in the summer of 2024, between that kind of main NVIDIA earnings and the top, which was July 9th, before the yen carry trade unwind, created a big de-risking event in the concentration plays. And that's what's basically running right now. The market hotter and higher is NASDAQ 100. We've got Avgo earnings reporting tomorrow, likely puts a little sentiment nod into the semi space. That's one sector in this tech space that has not rallied. Quantum has been kind of taking the mantle, or the relay race, if you will. They handed it off to the quantum plays, and we'll see if Avgo beats and then NVIDIA follows up, because it has been the one Magnificent 7 player that has actually been sideways. It's not fallen apart, but it certainly isn't going anywhere fast. So we'll talk about that theme because that's something we did last week, and we'll follow up on lots of the trades that support it, and then some other sector rotation views, as well as the some options education on portfolio hedging, something that has been a topic with clients recently, because we are kind of getting into the end of the year with potential shake and bake come January, February. But first, we have to get through FOMC next week, the 18th. Bank of Japan, not a lot expected there, but a 96% chance for a Fed rate cut next week. And then the options expiration on Friday, end of the year, and then we'll come back and hit it again. So let me turn it over to Hans and kind of get your your focus of interest right now, Hans? How do you see the market?
So everyone's tossing out puts, and so we pulled back, through that collar strike. And I said yesterday, I was talking about how there should be some support in there around 625, 630, and sure enough, we got it. But we definitely got a lot of help from CPI, which was kind of a neither here nor there kind of number. And I think the market was a little worried that it was going to come in a little bit hotter than expected, and we weren't going to get our wonderful spiked punch bowl. And so I think this kind of keeps the Fed on track, and I think it takes some of the volatility out of FOMC, right? So we can see that they're pricing in.
Exactly, 96% chance it's a done deal. They're going to have a 25 basis point cut. And so now the market will have to worry about what they're going to do in January. But that next meeting is January 29th. There's so much time to push that off.
So much time, exactly. A lot of data to come, even a little bit of data next week, and then FOMC. But at this point, it might be a foregone conclusion. We're seeing VIX down around 1359, 1360. I think it could drop a little bit more. So, we're holding on to our long puts in our December 15 puts. I've got some SVIX, some SVXY as a play on the structure, because you get that kind of beautiful contango picture in the VIX term structure. And so I think some of those plays still work, but the easy money's been made, right? So now we're down in this low vol environment where a lot of the kind of hard work has been sort of taken up by the big vol drop that we've seen since the election. And now it's just kind of the boring old option plays that pretty much are theta decay type plays. And if you want, you can definitely still capture some of these upside moves in. I mean, everything's kind of going, Tesla's going parabolic still. It just doesn't let up. It's on its highs for the day. All-time highs, I think we closed at.
Yeah, 414 plus was the price target that I had this year, because it's basically the prior high, 2021. It's already shot above. Google is shooting above. Yeah, there's definitely animal spirits here. And I just wanted to talk real quick about that CPI. CPI was flat, which is very encouraging, obviously, for the Fed cutting. But it's also very interesting that shelter component was a major reason for its flattishness, in other words, as expected. So as that pulls down or makes up for the goods inflation that was hot, it kind of comes out as flat as expected. And that's actually going to be pulled forward probably another 2 or 3 months. So the expectation is that Fed would still have a path for normalization. So anyway, long story short, it could give the Fed, originally I thought we were going to pause in January, end of January, but now with this CPI print being flat on this lagging shelter component, which is falling, that will help negate some of the goods inflation, which will help the Fed to continue its normative rate cuts if they want, which is very supportive to markets. Long story short, just wanted to get that in.
It's all about the porridge being warm. I always like to talk about the porridge. Everyone's going to think that's my favorite breakfast, but it is the market's favorite breakfast for sure, because we don't want things to get too extreme one way or another. And here we are, and the market's enjoying it. And I think that sets us up for potentially another run higher. I think we do have there's a lot of gamma, as we like to talk about in the options world, which is heavy duty positions between that 60.25 and 6,100 levels. If we can push through 6,100, it's hard to believe, but this can even get more parabolic. We talked about this a little bit last week. This can get even worse to the upside for the bears, basically. A melt up that would make Tom Lee blush. Even Tom Lee is what's funny, I looked at a lot of the targets for 2024, and they were sort of 4,800, 4,400, 4,600, and here we are at pushing 6,100. Now everybody is raised, everybody's kind of jumping on board. Even David Rosenberg is kind of throwing in the towel a little bit. Like long-term bears are going, you know what? Yeah, he literally said, I don't know, but there may be new math to the way things work, literally new math. And so that's basically,
the falling dollar that he should know a lot about, but it is ironical. But yes, we had 2 themes last week. One was I'm bullish, a growth rotation a la summer 2024. And we could trigger a melt up that would make Tom Lee blush. So here we are. The Qs are pushing. I still have 548 for the Qs because I have to keep, revising upward. Every target that I had from November of 2023, right? And then it hits, and then I have to go find a new target. And now I'm at my next target. So 548 it is for the Qs.
All right. So Let's do a little rundown of the sort of volatility backdrop here before we get into a couple of interesting things. So here's your realized volatility, plunging, plunging, plunging. Every time we get here, boom, we take off, we take off, we take off, we take off. So this level here is kind of that 5 realized, which is just really almost no movement at all. That if you look at S&P options, we're pricing in like almost no movement. A few weeks out, we're pricing in like 50, 60 basis points. It's very, very little on a daily basis. So, but I mean, this is what's happening, right? There's no fear at all. We're just tossing puts out the window. We're getting massive flows. Look at this, 141 billion worth of inflows over the last 4 weeks. So this isn't just, I mean, if you're a bear, you really have to sort of stare at, at this kind of stuff and sort of go, wow, this is, I am trying to push a boulder up a hill here. I mean, people are piling into markets. This is one of the most astonishing charts here. I mean, we talked about parabolas. So all these stocks going parabolic. Look at sentiment towards future stock appreciation. Absolutely parabolic. I mean, this is going back to 1988.
Those are surveys, and people feel really good when they're making money in the stock market, and the hope that they have fewer taxes on that moving forward under new, administration. But it is a survey, so there is a bifurcated K-shaped economy, no question. The wage earners are not feeling that, so the wealth owners are.
Right. People who don't own stocks are not sharing this sentiment right here. They're hearing, oh, inflation's under control, but everything I buy is 45% higher than it was 4 years ago. So there really is this bifurcated world out there. So, definitely being sensitive to the fact that half the population isn't feeling this kind of exuberance probably out there. But our job is to look at markets and where to make money in markets. So, good or bad, that's what we do here. Monday really kind of threw a wrench into it. We had this 3.4 sigma shock in the long term, in the momentum factor, which is like, a massive, massive move. Like we're showing this bell curve here. So don't have, bad sort of flashbacks to math class, but this just means that kind of move doesn't happen very often. But bounce back we did, right? We blasted right through those levels again. And it's just too strong. We see this gamma that I'm always talking about all the time. And this is why people need to sort of at least pay attention to this. Even if you're not an option trader, the tail being the dog now and derivatives really being a big part of everything, $10 billion worth of gamma per 1%. You can't see it here. Oh, there it is. Per 1% move. So that's very supportive. We have these massive positions out there. A lot of that is going to start to burn off next week. I think I heard it was maybe the biggest expiry of all time next week. So we're going to have some massive, at least on the index level, massive, massive positions are going to be burning off. And so that's going to sort of play into the second half. Seasonally, December can be very strong seasonally in the second half. The first half is a little bit ho-hum, right? But the second half, and that coincides with December, January often. Yeah, and these are big positions, right? So think about when they list options a year or two out, they're almost always around this time of the year. So when we get close to those positions expiring, they're always huge expiries. And so we have big positions baking off and disappearing. And of course, we don't know exactly what's going to be rolled and pushed forward into new positions, but there is the potential for more kind of unpredictable movement in the second half of December when everyone's kind of trying to take some time off and liquidity kind of dries up a little. So, all bets are off and that goes in both directions. That could be downside as well as upside, but anything can happen.
Let me show one bearish chart that I came across today. And I know that bears will find the bearish and the bulls will find the bullish, but I did find this particularly interesting since we're talking about the flows coming into not only the end of the month, but also the quarter, right? And the leaps in January, et cetera. And that's typically after the January leaps the gamma comes off that board. That's very large. January is huge. So after we get the weekly on this next week, the quarterly end of the year, and then the January leaps, we really, I think, will set up for a correction. But that's because I think there's going to be this rollover after FOMC on the 29th. Now, this is just a chart that I grabbed similar to what you just had, right? Which is, okay, maybe we've got a little bit of a warning here. This is Sentiment Trader put it out. There have been more declining than advancing stocks in the S&P 500 for 7 straight days. and this is as of 12/10, so yesterday, the index is less than 3% off its peak, and that's happened only twice before in the past 25 years. And the reason I mention that is because if you my market thoughts that I write up for clients in my live trading room notes, I've talked about how since December 2nd, there has been net selling underneath the surface. So breadth is one thing that I look at. I can see clearly the growth rotation. I can show you those two key charts that I showed last week that I keep showing every week. But then I can show underneath where the RSP to SPY, for example, those that are equal weighted, the SPY 490, not the SPY 10, are absolutely not participating in this breadth expansion. So this is one example where net selling has been picking up underneath the surface since December 2nd. That's always an air pocket of risk waiting to happen. And also why I see the FANG stocks picking up, right? The money is just, it's congregating into the biggest mega cap tech, biggest moat plays, but that's dangerous in time. It's unwieldy, just like we had in July. So this is sentiment traders saying the index is less than 3%. This has only happened 3 times, just so happens to be around that, 2000 high and, back here before we had the COVID, the 2021, pullback of size. So sometimes these can actually rhyme. And it is one way that I tell that the market is starting to get a little bit toppy, but we're not there yet, right? It's not a timing tool per se. It's definitely a warning. This is the chart that I showed last Wednesday and the Wednesday before that. And basically it's saying we're still going to get a growth rotation. And literally this is a ratio. Okay.
I remember you've been showing this for months.
Every single week. I show
what a
it
breakout. Yeah, what a breakout there.
And this is what happened basically post NVIDIA in May of 2024. Again, they had a really big surge, but the point is this move from early June until early July, this is on a daily, by the way, was parabolic. And so just so happened, I happened to be doing a webinar with Craig, and it was on the 9th, and I warned, be careful. And then we had the yen carry trade come in, oil fell, 10-year yields fell down to 3.6. We had the August 5th reflexive bounce. I was on vacation, you covered the trading room. Anyway, this is that big, huge move. And so this is what I've been talking about. I think we're gonna have a rotation, or what I call that, the rally a la July 2024, summer 2024. And this is exactly what's happening. So where it stops, nobody knows. I'll start to get a little bit of a feel, but that's extended. The other chart that I showed you was...
Is that so this. when you're concerned about MAG, Samantha, is that that's kind of a rush into these balance sheet heroes, as I like to call them, where you can really kind of safety in names like Apple, even though Apple was kind of slacking off today a little bit, but compared to the others, but that's kind of a flight to safety in a sense, right?
It is 100% concentration risk. So that can imply, yes, a kind of a safety. At the same time, it's a source of funds. I can see that there's net selling underneath the surface for the other guys. So the NYSE, the small caps. This is definitely not a Tom Lee rally in small caps. You know how I feel about that. but this shows me when growth is going to absolutely overtake value. Value as defined by, you can't really get going in financials or insurance or metals and mining. I don't mean gold and silver. I'm talking XME, XLE, energy, XLV, XLP, XLU, XLF, the stuff that is value in the sector rotation world. Okay, but this is clearly XLK. Semis are not taking part of this right now, right? They're trying to get up and go, but they haven't. But this is the MAG 7. So this is the one that I show on the weekly, which I've been showing since January of 2023. Remember this one? Where literally NASDAQ, this is not NASDAQ, this is just 7 stocks, and it's in a ratio, it's in a formula. And I show this every day as well because it shows the strength in MAG 7. Anyway, long story short, from July of 2023 until Q's just hit $524, we rose up 100% gain in NASDAQ 100. And it's in large part because of the cap weighting in NVIDIA and the MAG 7 plays. Actually, I would say even Avgo and Walmart, they're all part of the top 10 cap weighted in SPY. So this is broken out. Like, remember I said this was my target, the 1618 fib retracement level on a weekly. This is what this ratio represents. It's a weekly chart. And this was the August 5th. Remember that right here? Incredible short covering rally. And then we went sideways for a while, kind of stuck in the mud. We did a little talk last week going, okay, it's kind of molasses. And then boom, things started really happening. It exploded higher and they broke through this level. So that was last week. And here we are. That's the problem.
That's without NVIDIA, right, Samantha? That's without NVIDIA. Isn't that amazing?
Exact point. It's without Avgo. Avgo's been going sideways, semis in general, but Avgo specifically. Avgo has earnings tomorrow. If they beat, NVIDIA is going to come up, out of this 136 where it's been pinned, and the inverse is true. It'll be a sentiment tell, but the point is, with Apple all-time highs, and now Google all-time highs, and Tesla at all-time highs, and Netflix and Meta and Microsoft, oh my, we really do have the story of Goldilocks for the market in general, but it's really disguising the concentration risk, which will become unwieldy at some point. So this is the only reason why I keep showing that over and over and over again, because it really does demonstrate my overarching point of.
Let me show you something, Samantha. So you don't tend to see this in big cap, but this is a whole new world. We've seen some crazy stuff in NVIDIA as well in terms of the skew, in terms of the magnitude of moves that we can see in a $3 trillion stock. We didn't think that was really possible, but all that is possible. And so you're seeing Google, it's kind of breaking out, and guess what? It's starting to go parabolic. It's starting to act like a Reddit, like one of these crazy stocks to some extent, not to the full extent. And look what's happening in the options. We see this typically. It's fairly normal on the skew side. So anything above this line here means that puts are more expensive than calls. So it's taking a measurement of out of the money calls versus out of the money puts. So these are always fun charts to look at to kind of see, well, where am I getting value? If I'm a call seller, am I getting relatively good value versus puts? Is the skew working in my favor? Or if the skew is the other way, then maybe it makes sense for me to do something different. And this is one of those times where they're pushing into Google. Look at what the Google skew typically is. It's typically kind of inverted. I mean, this is normal, right? Normal, I would call it. The puts are more expensive than the out of the money calls, and these are the at the monies in the middle. What you've got suddenly is yesterday you started to see people get a little interested. Eyebrows were raised as Google made that first initial move, and then today volatility actually exploded higher. You don't usually see that with a big cap stock that's starting to move up. But the move was so alarming, catching people off guard. I see these things, and that in itself kind of makes me a little bit skeptical. Not for tomorrow, not for next week, but these are not kind of natural things happening. And look at how that's playing into the option volatility. Upside call skew getting pushed way up versus what it normally is. And so this chart above here, it kind of shows you, well, puts are normally more expensive. Look at the calls. They've exploded here. That rarely happens. Back in March, we just had a little bit of calls expensive versus puts. But this is going bananas. And that to me is telling me, I mean, you can interpret those kinds of upside call skews as either, if you see that before a move, that's a sign that something might be brewing and going on, right? So that could be a premonition of like a gamma squeeze or something like that. But once you see something like this after a stock has had a good run up or a significant run over a couple of days, it can show a little bit of exhaustion. But the fact that people are really reaching for upside here shows to me a little bit of pain. Like a little bit of pain, maybe shorts are rushing in to protect themselves. Like this is a bit wacko type stuff you're seeing in a stock like Google.
Can I show you something? Because I want to talk to this Google one in particular.
Before you do it, Samantha, which by the way is actually interesting. So if you own Google, this is a chance for you to go, you know what, those upside calls are a little bit richer. And so I was telling some folks today, some members, I said, listen, it's expensive. I still think you want to wait and see where Google kind of lands here because it's acting so crazy that maybe we fly through 200 and I don't want to get in the way by capping my upside too quickly. But if I see this market kind of simmering a little under 6,100 and I see Google kind of calming down a bit, which it may not do because it's starting to approach all-time highs or hitting all-time highs, then I kind of want to slam out some calls going into the sort of 3-week period of calm and maybe grab that little bit of extra income. Sorry, go ahead.
Take a look at Google on the weekly chart. I know it's very dramatic, okay? But let me just kind of back up a little bit. This was earnings. Remember, we actually talked about that because it went right into that gap fill, which was fascinating. It did a lot of back and fill. It even had an antitrust worry, or I should say investigation on it by US. And then it just literally hit that 200-day, which has been a fabulous place to get into Google again because of that 200-day support. But the point is, this news right here, where it gapped above that daily gap, the earnings, and where it obviously came up off the 200, is in large part really a fundamental shift. So I have a client who actually talked about this yesterday and again today. We had a DM. This announcement, right, by the CEO of Google saying, introducing Willow, state-of-the-art new quantum computing chip, breakthrough that can reduce errors exponentially as we scale up using more qubits, or however you pronounce it, cracking a 30-year challenge in the field. It's revolutionary, right? So the client I've had for years said, I've owned Google for 10 years. I'm buying more today. He said that yesterday. So believe me, that's not his only. He's very, very active manager, trust manager. This is something where he's like, this is revolutionary. I'm buying more of this Kool-Aid. So he hasn't bought any in 2 years. So the point is, this is definitely one of the major reasons, and this is by a conversation with Elon that happened to be, I grabbed this from Twitter. So the fact that this has run up so strongly, 11% in 2 days here, and it's ironic because for the client, I had this 193.60, let's call it 194 as a price target. If you kind of go back, because you know me, I love to go on a monthly. I throw a fib on it from peak to trough, 2021 down to that, 2022 October central bank intervention, and the 2023 everything changed and NASDAQ went higher kind of thing. This has been literally a fib extension of 1618, and it poked above there today. So yes, this is part of the
concentration. It's a sea change. Sorry, it's a sea change. He feels it's a substantial change. Yeah.
He's seen as a sea change. So very excited about AI. The next level is quantum. Quantum also might be taking some of this money flow from NVIDIA, for example, right? So this is the new cool kid. Actually, it's the old cool kid, but now it's really, folks are off sides. So this is just an example where he literally said, I've owned Google for 10 years. I haven't purchased any in 2. I'm buying some today. And he said that yesterday. As an example.
A joke today. I sort of said, well, maybe quantum becomes the new catchphrase, right? So I remember AI was like, boy, if you didn't mention AI, you're gonna be fired as an executive because your job is to say AI as much as you can. I don't know if quantum becomes, because anybody can say AI. I can say my toothbrush has AI, right? But not everybody can say, well, we're integrating quantum into what we do. So maybe it doesn't have that kind of usefulness in a way as a narrative, but.
There is, by the way, a quantum ETF. It has already broken out, and because I'm not one of the cool tech kids, right? It was actually Mike, our live trading room coordinator, who spotted this early and said, hey, quantum is breaking out. And with it, IBM, we later found Google, Honeywell. I thought Honeywell made corn syrup, but anyway, apparently. So he started like assembling a list of the quantum related plays, just like we did for the COVID vaccines, just like we did with AI. So these things have, a momentum that are not just the plaything of day traders, but also long-term investors. So just like the power producers within the utility space. Yeah, so there's nuclear. Anyway, there's definitely a theme. There are many themes that are going on right now. They're all kind of coming together and they're very exciting. What's going to be the theme for next year? I don't know, but that's just to kind of touch on that. Quantum is taking a little bit of that banner of the AI hope, and Google is definitely rolling out the rug here for the carpet, for the red carpet for investors to jump on.
The quantum, I don't know a lot about quantum. I mean, this sounds like the promises are incredible. All I know is that the cat can be in the box and outside of the box at the same time. I don't know how that's possible, but the cat can be in 2 different places when it comes to quantum. So I'm impressed with quantum, if that's true. I'm impressed that a cat can be in 2 places at once. So I have a lot to learn though about quantum. So what I would say though, when you look at, and I would say definitely don't bet against this market. I mean, you can take sort of measured, maybe do some broken wing butterfly plays. I'm thinking maybe something on Tesla is going to get a little extended here. I might just set something up to the downside to play. There's a massive, massive wall at 400, which was allegedly some sort of resistance, but at this point, it's going to be support, right? There's a huge, huge position there. So I wouldn't be surprised if we get some sort of magnetic move back to that level once the animal spirits kind of wear off just a little bit after this big run we've had. So I'd be looking at some sort of downside fly in something like Tesla. That might, very limited risk, right? So I see people doing things. I had a prospective client reach out to me this week and he's like, oh, I made all this money and then I got destroyed. I lost like 400 grand on Coinbase. And I'm like, well, what did you do? And he's like, well, I was selling naked calls into this. I said, oh my goodness, no, you have to figure out measured, limited risk, smart ways to get short. And one of the great ways that I like is, using just a simple old fly or a broken wing. You break that bottom part of the fly, and you so that you don't, so that you're not right on direction, but you don't make money, which is the worst part of a fly or a calendar. You can potentially not make money, and even though you're right on direction. But in something like this Google here, like I wouldn't bet against more parabolas. I wouldn't mind seeing another sort of 50-point drop and then, kind of set us up for another sort of drift higher. And you could look at something like Google, making all-time highs here. Vol has jumped up a little bit, so I wouldn't say you just kind of rush out and buy up, out of the money calls. But you could pick up something like, 200. Now my markets are kind of crappy now, but a 200, 210 for a reasonable amount of money, just for kind of a pop. Like I would.
All right, just pausing it there. So I was busy rebalancing everything. So I got a bunch of new longs, rebalanced my 401k back to aggressive again after staying in bonds for a while. And yeah, we'll see what happens. But yeah, so the first thing you got to watch into Monday is watch the IWM and the TLT and gold and silver. Look at all those things, okay? Watch all the things. If they don't improve, that's why I warned about gold. I was just like, man, you guys gonna do like the gold miners? Now it's broken down. So GDX, gold miners, right now, yep. This ain't right. That is not a good look. So I have to watch this. If there's opportunity in gold miners, yeah, I'll tell you. But otherwise, nah, that ain't the place to be. So this chart looks horrible. This is why I said, like, oh, when it did that, like last week, this whole move, and it came back down after the China pump, like quick China pump, it's just dump. You're like, nope. This ain't time. And now it's doing this. So GDX is below 36.91. Yeah, you do not want to be silver, gold miners. No. EXK, So do not get back in. You guys were already out like back in October, Halloween, whatever. That was the best time to jump out. Do not be in a rush to be in. Now KGC, yeah, it's gonna test that 850 probably. So no, there's no hurry. I'm in no hurry. Definitely do not play the GDXU, the leverage stuff. And the same thing with China, right? So after today, it's just like no. So I'm gonna look back at here. Let's talk about like the Mexican stocks. This is what it is. So we're back where we were, back at the 10 area. So I was like, yeah, if it's below 10, yeah, you should buy, hold on, see what happens. Now after today, yeah, see what happens here. If it holds it again, okay, then we're ready to go up. Otherwise, no. I think yesterday we had some dividends released, so that's why you have this bigger candle on the EWW compared to the MEXX. MEXX is 3x of the EWW. So yeah, this is why, like, yeah, you got the dividends come out. People were selling after they got their dividends. It's just like, yeah, I got my dividends. I'm getting the hell out. So now this is kind of like this bottom feeder type stock where it's just complete trash after the election of their president, and then Trump gets in, and right. So this is the worst case scenario. You have a socialist president, you got this, and then now you have Trump coming in the U.S. So this is like a bang bang. This is a lot more attractive as long as it stays here. And then when it comes back up to 50s in the EWW, then I'll be like getting more aggressive on the MEXX. Otherwise, no. Just keep chill. I'm not playing that. And TLT, same thing with the bonds. Yeah. So a lot of people, if you got in like the 90s, like the lower 90s, yeah, that's perfectly fine. You can wait and see what happens tomorrow. But yeah, same thing with gold. It's the same problem. Yeah. So TMF, same thing. I think around 45-ish. Yeah, most people got around 45 and below. Yeah, I started getting in like probably like 48, like accumulating there down to 40, the 40s here. So it's like, yeah, I'm not really gonna be committed to this until I see like a real push through the 50s on the TMF, which should coincide with the TLT at the 95 level, because that's a really hard level for it to get through. It's really a hard level. It's just rejected right there again. It's just not going to be easy, especially after today. So again, the easy stuff, yeah, you get the easy stuff. The hard stuff, this is the hard stuff. Right here is the hard stuff. Because they look like they're going to do something, they're not. That's the problem. So a lot of the expectations today were not met. Definitely not met. So, I mean, well, we still got sound. That's still green, surprisingly. So there are some things that are quite bullish. I wonder what the AOI was doing. I mean, some of these stocks, oh man, it's still green too. Those are up 5.82. Yeah, some of these ones, okay, I might have to get more aggressive on, but we'll see. We'll see if I'm gonna recommend them. Asan, finally. So I think this will have to retest. This will definitely have to retest. So today is down 10%. Could this be a buy soon in a couple weeks? So we'll see. I mean, there's a lot of things where we'll have a we'll see, right? Yeah, you see that? IONQ down 14%, but it's still above the support. QUBT didn't care. Still up 52%. Yeah, there's a lot of things where you're kind of like getting mixed signals, right? You get a lot of these mixed signals. You're kind of saying like, conditions are not good, but oh man, yeah. I'm going to have to really look at this stuff into Monday, because they may really be a good play into next year if we survive the whole options expiration. It's a rising channel. Yeah, but the problem is, it's like, dude, you do not want it to do what it did today. That's the problem. That's the problem. You don't want it. That's why I'm like really cautious about all this stuff going to New Year's, because as I said, a lot of the easy money was already made October into November. We got through December. A lot of stocks kept going even into last week, but you already saw like some stocks, they weren't playing. Right? A lot of stocks were not playing ball. And you're kind of like, well, that means it's up to Powell. And Powell didn't deliver, right? So that means we got to go through options now, essentially through Friday into Monday, because Monday is when everything gets cleared out. Because you're going to have to get through Friday, and then after everyone's done on Friday, then it'll linger on into Monday, and then we get into the real Christmas into New Year's week, where people are just really off. Because I think that everyone just left. Everyone left the building last week. I was already gone right by that time too. I'm like, I'm not trading no more. I ain't gonna care anymore. I took most of my profits out. Whatever leftover is leftover. You guys gotta prove to me that the second half of December is really going to be good. So I play those videos where people are thinking like, yeah, we're going to get something good happen. We're going to get something good happen. Nope. It was not verified today. If it's not verified today, I can't recommend it. But I do see some bright spots with the sound. I was surprised. I thought like yesterday, SOUN sound was just going to crap out, like completely crap out at 18, but it fought. really hard. And I'm like, what the hell? And then you see all this quantum computing stuff. You're like, what the? So all the stuff I recommended is just like, oh man, 52%. What the? Okay. So, man, it is so difficult for me to really recommend anything right now until I get to the New Year's. I'm not going to tell anyone to do anything at this point. I'm just going to keep looking at this stuff and go, well, yeah, this looks kind of good. Like Air, this looks kind of good. NVTS, but damn, I'd rather just wait. I'd rather just wait for the first week of yeah, but it's not that good, huh? RGTI. Yeah, you recommended that. You talked about that. But I was the one talking about QUBT. Look at that bad boy. 52% on what? This week? On what? And I was talking about it on Monday when it was already up too. I was saying like this chart looks really good. And it's just based on what the chart looks like. So if you look at the chart on QUBT, look at that. It's just like, hey, what's going on here? This thing keeps looking good and good. Like it had this whole cause right here from November 22. So right before Thanksgiving, so 1 month where it goes sideways. And then once it pumped on Monday, I'm like, oh shoot. That means it's going to go up, huh? Yeah. And the next day, up again 36%. Next day, up 18 to like now we're at the end of the day. It totally didn't care about Powell. It's like, I don't give a crap about this old guy. I'm going up 52% just cuz. Probably because like everyone was shorting it, That's it. QUBT was the best one. That was the only one I was talking about like on Monday. So if you look at the charts, you could see which one was really going to fly. And IONQ, like the more mature one, you see like yesterday it wasn't really having it, and then now it drops back, but still it's up, right? It's up for a month, but you see like this whole area here was going sideways, kind of like QUBT. But QUBT, the way it jumped out of that whole thing was a lot stronger, and the next day just confirmed it. So that's it. And I'm not going to say what's causing it. It's probably because of shorts. I'm sure because this is a smaller cap than IONQ, meaning that it has less shares outstanding. It's just way easier to pump it, right? If too many people crowd in and try to short this thing, that's the problem. Like shorting is not an easy game. Like maybe this company should be at zero, but it doesn't matter. You're creating your own worst nightmare by over shorting it with all these people. So in any case, let's look at that. The VUZI, I was talking about this like just before Powell was talking. I said this is a good trend. Now it's pulling back, right, on Powell. So it's at below $4. Maybe this is another one. So this is kind of a meme stock because it was involved with the whole GameStop thing way back when. So the way it's popping up right now, yeah, it's a lot better. So because GameStop, right? Yeah, here is like, oh man, yeah. See, it just fell back on Powell because it's the IWM. You got to get the IWM up. This thing cannot survive without it. Even though the GameStop got taken out of the IWM, the Russell 2000, it got moved up to the mid caps, I think, for the Russell, and so otherwise, just chill. There's nothing really you want to do anything about. So let's look at Bitcoin right now. So I got to talk about that. So yeah, it's retested that whole 100,000 area as Powell was finishing up talking right here. So I'm going to be curious to see how it goes because I think this whole area between the 106 to 107 is going to be tough now. Definitely tough because the whole thing where it was moving Monday, Tuesday, yeah, that's why I already drew it. That's why I already drew this rectangle like yesterday, because once I saw Monday and then Tuesday's action, yeah, this is real. So that's why when I draw these rectangles, that's where it comes from. I just look at these congestion areas. So you look at the chart, you're kind of like, oh, I see something. So like MSTR, same thing, right? With the whole like fighting in this 402-ish, 415, 420 area. Yeah. Like I think if you look at the hourly, you can kind of see it more, where it's just like it just fights, goes back up, fights again through it, goes fights again, falls back through fight. Like it fights way too much in this area, right? And it bounces between a range. And it's mostly it tries to go between 350, 420 kind of, but yeah, it kind of it will extend below and below it, above and below it. So if it's doing this, yeah, probably another try to go up. Yeah, probably into next year. So I would say like, yeah, watch this thing. So once all the options clear out by Friday, yeah, I would say like, might as well be worth a try Friday to Monday and then see if it goes into the next year. But otherwise, yeah, there's no rush. There's no rush. Nobody needs to be rushing into any long position right now. That's what I think. Yeah. So that's why I kind of like, I'm kind of like 50-50 on the whole thing. And I kind of like, well, easy money's been done. Like try to gamble on like what the market will think, what Powell was gonna say, and this and stuff. It's just like, yeah, I'm not gonna freaking play this. So it could go either way. But now that we've went down, I'm gonna see where I'm gonna buy, because I just reshuffled a lot of my 401k. A lot of my 401k. Buy the dip. No, I don't know, Eric. By the I would say like hold your horses till Monday. You got time because nobody's trading right now. Right now, everyone's on vacation. Nobody cares. Like I said, all the easy money was already made last month. I already got like mostly out of everything, and now it was just like sitting on my hands with cash, just going like, well, should I go long or not? And then nothing was making any sense last week, right? And then I know options expirations this week. We got Powell. And so like I'm not gonna rush into this. Like, and everything's just flip and flop. Like, no, nothing. So, but yeah, for now, I would say buy the dip. Just because like everything's so cheap today. So that's why for my 401k, I just rebalanced everything from the conservative cash and bonds back into small caps and large cap growth, just in case the market flips and changes its mind next week, because that's probably what I would do. Because I wanted to get rid of all the options this week, because last week wasn't good enough. I just want to kill as many call options as I could last week, and I just did it. I just did it today. I think this is significant enough to be like, well, come on, you go down 3.61% on QQQ. I bet there was a ton of idiots still longing a lot of calls, and they had to get wiped out. This is huge, right? Yeah, you gotta kill these guys. All from Thanksgiving. And who knows? Maybe they kept them from election day, and they decide to hold into this week, options expiration, and you know that they do not want people to make their money holding those call options. They had to push it back down, right? Actually, I should look up the max pain for this. You guys can look this up yourself, but yeah, max pain. Who knows when they cool off? Well, yeah, tropes, yeah, who knows when they cool off? That's the problem. When you do like small little caps like that, you kind of don't know. It really depends on the supply of the shares and demand of it. So anyway, let me continue on with the video.
I wouldn't marry the trade. I would date that trade because you don't want to stay in there too long just in case things turn down. But I think you could kind of look around this market and sort of, the opportunities aren't as good as they were. You remember when we were talking maybe a month and a half ago, we were sort of looking at that downside and we were going, boy, they're underpricing upside and everything. And guess what's happened in the last month or so? They've completely pushed up that upside in so many names. That Google example I just gave you, a perfect example of that. Of just everyone going, wait a minute, this isn't your typical sell calls and hammer the upside. You know, I used to manage all these funds. That's what you did. You just sold your 10,000 calls and smashed down that upper call skew, and then you know the market sort of behaved in a more predictable manner. Now everything's a parabola. Google can turn into a parabola as well. So you know, I think there's still some meat on the bone for some of these plays. That have lagged a little bit. We've seen Microsoft catch up a little bit. Google, I think, is interesting. That could have a little bit more. So, you know, there's opportunity out there. But let's take a look at Tesla, for example, here. What if I picked, now with these flies, you kind of don't want to go out too far. I've seen people kind of go out to like March, April on a fly. You're not going to really get that. What you want is gamma when you're trading these things. You don't want, it looks good on paper if you place it sort of at the 3-4 month out duration, but it's not going to give you that. It's going to give you very little delta. And what you want is a little bit more reactivity. So with these things, the temptation is to give yourself tons of time. Don't. You have to kind of, you have to sort of sit around and say, okay, I believe this is going to come down. So if I picked like a January, that's a lot of time. I could maybe go and pick up oh my goodness, I have to go up so far now. Look how these strikes go all the way down to 5 on Tesla. When we were talking about, you know, these options are listed like years ago, we have a 5 strike on Tesla in January from when these were very, very long duration options. Look at that. We jammed it up right at the end of the day. So you could sort of pick up maybe a 415, sell a 4, you know, it's a little bit close, maybe a 415, 400, and then buy like a 390 or something like that. And let's see what that sort of prices as. Probably a little bit too tight. Maybe we could do, I'll probably wait for it to go up just a little bit more. Maybe do like a 425, 400, 390. So it might look like something like this. So on a 1 lot, leave it as a 10 lot. On a 10 lot, you're going to buy the 425 put at $33. You're going to sell 2 of these for $40. So that's going to put about $21. So you're going to put about $8 in your jeans there, and then you're going to spend a little bit extra. So you might spend about $9 on something like this, $8 to $9. But if it comes down, we could see a little bit of that volatility come back down, because look at what's happening to volatility on Tesla, right? So this is a new world here we're in, where things, even huge companies, are going up and the volatility is following it up. And this is because of this sort of used a word earlier on Google, alarming. That was it. These are alarming moves, right? We're seeing alarming moves to the upside, and volatility is going, oh my goodness, what do you mean we're going parabolic on this stock yet again? We actually saw it on the whole coin complex, right, recently, where you get to this level of parabola, and the vol market doesn't know it. It sort of goes, well, I don't know where this is going. This thing could go to $1,000, go to $2,000. I don't know. I'm scared. So volatility just starts to price in crazy possibilities. And then all it takes is for things to kind of come off a little bit. And so I did a little video of this earlier, and I said, interestingly enough, take a look at, I wanted to show you guys this. We saw, even though some of these names have rallied in the coin complex, for example, or in MSTR, in some of those names.
NASDAQ 100, that was announced today, MSTR.
Okay, there you go. There you go.
Negative earnings play, it doesn't matter. It's
doesn't matter anymore. No,
yeah,
no.
The game is on, as you said.
The game is on. The game is truly on, and it's a very difficult thing for traders to deal with now, because you're kind of like Rosenberg said, there's new math, right? There's just new math, and it just smells like that old saying. Sometimes, this time it's different, and it really never is that different, but it can stay different for a long time. And so you have, for example, I thought it was interesting today, you saw a huge move up in some of these names. Here's MSTR, and here is coin. So this was a great lesson in volatility, because typically what we see when these stocks start to go up again, we see volatility rise, because they act the inverse of how, you know, normal things act. Maybe not Google and Tesla these days, but in
Yeah, sorry for that. I got to reboot the whole thing. I think we got memory issues right now. But so this is why, you know, you can make money when a stock goes sideways. So listen to this whole area, this whole discussion, like, carefully here.
Introducing the 3-part options.
So let me try to restart
be out there, but let's take a look at Tesla, for example, here. What if I picked, now with these flies, you kind of don't want to go too far. I've seen people kind of go out to like March, April on a fly. You're not going to really get that. What you want is gamma when you're trading these things. You don't want, it looks good on paper if you place it sort of at the 3-4 month out duration, but it's not going to give you that. It's going to give you very little delta. And what you want is a little bit more reactivity. So with these things, the temptation is to give yourself tons of time. Don't. You have to kind of, you know, you have to sort of stick your flag in the ground and say, okay, I believe this is going to come down. So if I picked like a January, that's a lot of time. I could maybe go and pick up oh my goodness, I have to go up so far now. Look how these strikes go all the way down to 5 on Tesla. When we were talking about, you know, these options are listed like years ago, we have a 5 strike on Tesla in January from when these were very, very long duration options. Look at that. We jammed it up right at the end of the day. So you could sort of pick up maybe a 415, sell a 4, you know, it's a little bit close, maybe a 415, 400, and then buy like a 390 or something like that. And let's see what that sort of prices as. Probably a little bit too tight. Maybe we could do, probably wait for it to go up just a little bit more. Maybe do like a 425, 400, 390. So it might look like something like this. So on a 1 lot, leave it as a 10 lot. On a 10 lot, you're going to buy the 425 put at 33 bucks. You're going to sell 2 of these for 40 bucks. So that's going to put about $21. So you're going to put about $8 in your jeans there, and then you're going to spend a little bit extra. So you might spend about $9 on something like this, $8 to $9. But if it comes down, we could see a little bit of that volatility come back down, because look at what's happening to volatility on Tesla, right? So this is a new world here we're in.
Yeah, the damn video just stops right there. Oh my god. Let me see what's going on. Hopefully, I don't know. I think StreamYards took up all my memory right now. Let's see. Okay, let me try it again. Kill off some of this stuff. Let me try it again.
A 415, sell a 4, you know, it's a little bit close, maybe a 415, 400, and then buy like a 390 or something like that. And let's see what that sort of prices as. Probably a little bit too tight. Maybe we could do, probably wait for it to go up just a little bit more. Maybe do like a 425, 400, 390. So it might look like something like this. So on a 1 lot, leave it as a 10 lot. On a 10 lot, you're going to buy the 425 put at 33 bucks. You're going to sell 2 of these for 40 bucks. So that's going to put about $21. So you're going to put about $8 in your jeans there, and then you're going to spend a little bit extra. So you might spend about $9 on something like this, $8 to $9. But if it comes down, we could see a little bit of that volatility come back down, because look at what's happening to volatility on Tesla, right? So this is a new world here we're in, where things, even huge companies, are going up and the volatility is following it up. And this is because of this sort of used a word earlier on Google, alarming. That was it. These are alarming moves, right? We're seeing alarming moves to the upside, and volatility is going, oh my goodness, what do you mean we're going parabolic on this stock yet again? We actually saw that we saw it on the whole coin complex, right, recently, where you get to this level of parabola, and the vol market doesn't know it. It sort of goes, well, I don't know where this is going. This thing could go to $1,000, go to $2,000. I don't know. I'm scared. So volatility just starts to price in crazy possibilities. And then all it takes is for things to kind of come off a little bit. And so I did a little video of this earlier, and I said, interestingly enough, take a look at, I wanted to show you guys this. We saw, even though some of these names have rallied in the coin complex, for example, or in MSTR, in some of those names,
NASDAQ 100 that was announced today, MSTR.
Okay, there you go. There you go.
Negative earnings play. It doesn't matter. It's
doesn't matter anymore. No,
yeah,
no.
The game is on, as you said.
It is on. The game is truly on, and it's a very difficult thing for traders to deal with now, because you're kind of, like Rosenberg said, there's new math, right? There's just new math, and it just smells like that old saying. Sometimes, this time it's different, and it really never is that different, but it can stay different for a long time. And so you have, for example, I thought it was interesting today, you saw a huge move up in some of these names. Here's MSTR, and here is coin. So this was a great lesson in volatility, because typically what we see when these stocks start to go up again, we see volatility rise, because they act the inverse of how normal things act. Maybe not Google and Tesla these days, but in these parabolic type potential moves, things that are flight to safety, things that have this explosive upside potential, you usually see volatility really take off when these stocks do really well. That's starting to get tempered a little bit. The volatility, the red line is yesterday, and today we saw just most of the day was kind of sitting at about the same implied volatility level as yesterday, and it pushed up just a little bit towards the end of the day in the afternoon. But basically, the market is saying, okay, I'm getting more comfortable with this range. So we had, I think it was Gabe in the chat, if I remember correctly, was asking a little bit about that Bitcoin 100,000. And I've been saying this for a couple of weeks. I've been saying, I just feel like that 100,000 level is like a bit of a magnet. It's just probably going to stick around there, maybe go a little bit higher, maybe go a little bit lower. I thought maybe we'd tag that 91,000 overnight yesterday, and we didn't. We didn't even get that low, and we bounced back again today. And so you're seeing this compression of volatility as volatility markets go, okay, now it feels like we're in a range here. And so I think there's still a little meat on the bone. I've been telling people you could sell cover calls against MSTR, against coin, against this whole complex, because you have this nice steep upside skew, a bit like we saw in Google, but this is a bit more normal in a name like this. This is not atypical for coin or for MSTR. You're going to see upside skew reflect the fact that people think it can explode higher. And so this is kind of a nice name. If you feel like I have, now I've been feeling like this for a couple of weeks, at some point, volatility is going to drop far enough that I think we're going to flip to the other side, where being some sort of long option play is going to become where the edge is. There's not a ton of meat left on the bone at this point in being short vol, but I think we still stick around probably at least until December expiry. If you wanted to get crazy, you could say maybe Bitcoin sticks around 100 grand until almost inauguration, maybe into January at least. So there's still a little bit of money to be made. So if you really are a believer in these names and MSTR and Bitcoin and Coinbase and things like that, not a bad way to pick up some vol. The other day I was looking, you could get 11.5% for a call sale, about 11% higher than where we were trading for about 30 days work. So that's pretty good. A 22% call away return is pretty good in a holding like that. So the volatility is still high enough for that. But I just thought that was kind of interesting. It's not being as reactive which is kind of ironic, right? Volatility isn't being reactive to MSTR going bananas to the upside, but it is being reactive to Google making a big move to the upside. We saw a huge jump in vol on Google. So it's, dogs and cats living together, right? Mass hysteria, as they said in Ghostbusters. So it's just crazy stuff happening these days.
I still have for Bitcoin 130, 135 from that kind of mid-October time frame. So however clients want to play it, there are miners that make sense and those that don't, but MSTR is mostly a NAV differential play and just a celebrity CEO, and I don't know what else you want to call it, a meme, a cult. But IBIT is the iShares Bitcoin Trust ETF. Have you ever played that? It's got some pretty plentiful options that have been exploding in that particular Bitcoin proxy as a way to kind of play as well. There's consolidation on our way up to that 130, 135 area. I am not obviously a pusher of Bitcoin, Ethereum, crypto, or any of it, but it is very tradable. We've talked about that. Coin, Hood, which is a little bit different because they're also in the transaction business of brokerage. But the other one is the Square, PayPal, Tesla. They all have some Bitcoin on the balance sheet, and they've all been doing extremely well for other reasons. SaaS reacceleration theme for the Square and PayPal and the like, but coming up off the bottom, basically that mid-tech space, the IGV components. But long story short, there has been a continued theme in select software and in Bitcoin and Bitcoin proxies, and they took a little rest, but Mara, is still hanging in there. Ethereum looks like it wants to do a double, kind of like the Bitcoin broke out of a big old wedge. Now ETH looks like it wants to, but that's also worrisome because that is rerouting, diverting money that could be going into commodities, for example, that are going into the speculative assets of BTC and ETH. So I'm not really a proponent of its value proposition, but I am absolutely aware that there is a lot of momentum in playing that trade. And so it's still in play. Long story short, it's still in play and commodities are not.
Scary. It's scary. I mean, I think, MSTR could end very poorly one day, but we don't know when that's going to be. I mean, people are paying 2.5 times or whatever it is, the underlying value in the stock. Why wouldn't you just buy, actual Bitcoin or IBIT or something like that? But I guess it's like you said, it's a belief in this charismatic leader who just can spin a story like it's no one's business. So here's the IBIT right here. You actually see that again. This is a bit like the other ones I showed you. Even though it did great, the volatility kind of stayed the same. So it feels like the Bitcoin complex, at least from a volatility perspective, is starting to get very comfortable with the idea that we're going to stick around 100,000. So that's what I've been saying for a while, but finally the vol markets are going, okay, we're going to sit around here. Now that means at some point, maybe that becomes a contrarian indicator. When the market gets too comfortable with 100,000 and the volatility gets low enough, that's going to create some opportunity for us. Right now, if you own IBIT, actually sort of prices nicely for even just like a collar or like a put spread collar. You could sort of sell this expensive upside volatility or skew rather, and buy some downside puts and kind of create a little bit of a protective structure there in case you're just a little bit worried. And you're still going to create a little bit of upside, for example, or you could use that upside call to buy a downside put spread. So your capital is going to be much more efficient. You're not going to create the full downside protection that you would with a single put, but if you spread it out, you're going to be able to create something for less money, some sort of protective structure for a little bit less money, and maybe even put a little money in your pocket from the call sales. So that's where a caller becomes has that little added kicker of, well, maybe I can turn this into a slight yielding type play as well as a protective play if I can structure it nicely. So there's some fun stuff you can do if you kind of know where to look. But I think, at some point, I think there's going to be an opportunity to make some money on the long side of volatility here again. See, we can see we're still fairly high. I mean, IBIT hasn't been around long enough to really give us much of a history of where volatility should be in a name like that. MSTR maybe is a little bit of its own animal. It's definitely beta Bitcoin, but you can see it's come down, even though it's still swinging around 40, 50 bucks. The volatility keeps dropping. So I'd like to see it kind of in the low 30s. And then I'm going to start getting a little bit interested there.
All right, so I have a question on, these are the long plays, and I know I want to go over a few more of yours that are, that we talk about, including one that isn't doing great, right? So there's lots of ways to make money in this market as it relates to the concentration risk of the FANG stocks, Mag 7, whatever you want to call it, the Bitcoin and Bitcoin proxies. There's no question about that. Trend long retail favorites from those who are positioned in Walmart or Costco, which is also a safety play, but it's also, you know, an incredible trend this year. To BJ's and TJ Maxx, which are two of my trend fave for a few years for that clients know. Think of it like the cousin, the baby cousin, the AI that's still hanging in there. Gold and silver is still trend long. We've had a little, you know, bump higher into this FOMC, which was a bet that I had last week. Parabola is taking a break. So there are still a lot of plays that are parabolic, but they're softening. So we talked about MSTR a few weeks ago. It's still holding the 21-day. It's hardly what you'd call weak. But there are not, this is something interesting. So let me just share something because I found this.
I think the parabolas are, on that note, I had a long Reddit position and
yes,
I missed the top the other day. I missed the top, but we rallied back a little today. But I said to myself, you know what, I'm not going to be greedy. I'm not going to wait for that top again, because if the parabola has, you know, if we're starting to come down the other side of the mountain, I don't want to get stuck long calls in this thing. So I got out. I made a tiny little bit of money. It could have been a really nice big win.
But
unfortunately,
this is an example where I remember this, we talked about this weeks ago. This had earnings and you were not in this pre-earnings. You grabbed it here at 104. And I thought to myself, you don't want to wait for it to digest. You're like, no, the earnings report was awesome. And obviously it went up, you know, to 180. So that's a phenomenal trade, and that's what's been going on in some part with these. This was an IP that didn't have a lot of data, but with, we'll call it the tech, the tech ecosystem, not an AI, not a quantum, just really excited profitability play that you were in. Now, if I look at something like a United Airlines, really not sexy. Until 18 weeks ago. So 18 weeks ago, August 5th, everything looks like this. It stopped going and started moving up, right? But this is different. This is 18 weeks of consecutive green closes. That's called a freak of nature. Now, for all the fundamental reasons you can say, yeah, travel's been awesome. The point is this big pink line is where we fell February 23rd, which was a say evening, COVID 2020. So it took a long time for this play to get back above its gap down from literally February of 2020. We're talking years on the ground. And then all of a sudden it shot up like hot fire flames. And I mean, through it, is there shorting here? Not yet, but we finally have our first week of pause. So that's that's another example, not a recent parabola, but one that's been in the making since August. Beautiful, you know, push higher and trend. And now it's in digestion. So I looked at, and there was another one that came up on Monday because I spotted this type of action that started to turn around, right? That's Friday, and then you got some Monday, and we're digesting a little bit, but there's some selling that's coming in. FICO was another one, you know, this big, huge push lower that's been an unmitigated by other names that stuff that's rolling over. Palantir finally hit 79, softened. So these are parabolas, these are extended plays, these are whatever you want to call it, but they're now in digestion, and Mag 7 is still doing fine, except for NVIDIA. We'll see about that. But the point is, how do you, this is the option question, right? Folks that are either staying long this parabola, but also now expecting, at least I am, some mean reversion trade, at least back to the 21-day, right? I mean, even MSTR did that. So here's MSTR, and here's that 21-day down here, right?
Yeah, no,
But
even Coke went on a run like that, like some, you know, sort of formerly boring safety type plays, and it pulled back a lot too. So I think it's if you've been patient this long, congratulations. I definitely think
there's
this is
some
a time
profit
we,
taking in the house. But then I saw this, which was interesting. This is bespoke, and also 1,000 stocks that were up 100 were down today, and they're pointing to the 9th, which was 2 days ago. Okay. And they were down on average about 5%. Now, it was interesting because in the trading room, I had seen a bunch of these without knowing this stat, right? That these were basically the parabolas that were digesting. Okay. So this is how I was looking at it: the app, the Palantir, the Spotify, the United Airlines, right? The FICO, etc., the FIX. So these were things that I saw in the room that were undergoing profit taking while Apple and Tesla and, you know, whatever, Google, oh my, we're running higher into the hot sun. This has, you know, this is like a nice little shopping list of potential shorts. So,
it is, yeah. I like that.
not a trend reversal, just a reversion to the mean, just a soft swing or pullback down to what I call the mean anyway, which is the 10-week. So if I'm looking at United Airlines, for example, this is the 10-week. So we're not talking a huge amount, right? This is not a big drama. It's about $8. But from 98, that's $10. So
yeah, and it could be a drip down, right? It could just kind of be a slow sort of drip, 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 drip. It may not even be violent. It may just kind of be, you know, down the steps.
That's what kicked in this week. And I thought that was kind of interesting to highlight.
That is kind of interesting. I mean, well, look, I mean, you always have a choice of getting out of a name if you don't want to hire, but I will say that we do have an earnings report coming up at some point here in January.
January 27th. Yep.
January. Okay. So, you know, maybe we're starting to see a little bit it may not, you know, that may not be a big part of it at this point, but it's up there. So I think the skew looks pretty flat. You could sell some calls. You could be a little bit more aggressive, right? So what I like to do is when I've had a good run on something, I'm not selling, you know, a 15 delta call, which is going to be so far out of the money. It's really not going to move the needle for me. It's not going to give me very much premium, and it's not going to give me much hedge value, because if I'm getting, you know, $1 for this call that's, you know, out a month, it's not really going to do much for me. So, and that's one of the big complaints with the cover calls sometimes is, well, it's not going to really giving me much. So, you know, give me something better. So I would move that strike down towards the, you know, closer to at the money to get a little bit more time value. And then you might even go into my sort of cash machine strategy, which is you could get a little bit in the money even, and you could kind of sell, you know, something sort of a little bit in the money, give yourself some premium, because when you start selling in the money, you actually start capturing a little bit of put skew, assuming the put skew is a little better than in a particular name. It may not always be, as we've know full well from our analysis of different names. But if you go a little bit in the money, you get that little extra bit of a hedge. Would I go out and just kind of buy puts on this thing? You know, they're not very cheap at this point. So if I look at UAL, you know, maybe I could buy like an 80 put for $2. That's not very cheap for a February. I mean, we're talking about, you know, a little more than 2 months out, paying $2, almost, you know, more than 2% of the stock price to pay for protection in my holding. That's a lot, but it's reflecting a very, very big move in this thing, right? So you get big moves in stocks, and you're going to have to pay up a little bit for insurance if you want to buy it. You could spread it out, right? So you could look at when option pricing gets a little bit higher, that's when you want to start spreading, right? So you want to kind of go, okay, I can buy one put and I can sell a further output. It's not going to give me full protection beyond a certain point, but presumably you don't think this stock can go back to 50 or 40 bucks. If you do, you probably just want to get the heck out of it. But if you're more measured in your hedge thesis or your pullback thesis that may or may not happen, then a spread can kind of do a nice job for you. If you bought like a 92 half in Feb for 575 and then maybe sold an 80 for a couple bucks or a 75 for $1.20, $1.25 if you could get it. Now, you've got a little bit more hedge value there, still not inexpensive. So I would say, on a name like this, I would not get bearish necessarily. Your point is well taken. We had all of those names down this week. Maybe this is a turning point in names that have done that well. So I would sort of get in there. Volatility's high. You are facing the prospect. If you sell a covered call, you're facing the potential for the report to be fantastic. And anything can happen on a chart like that. I mean, there may be a whole bunch of people with the same idea thinking, boy, this has gone too far. And then who knows, it jumps another 20 bucks. I mean, anything can happen.
It's interesting that you're talking about these option tactics. This happens to be a December 125 call, which is quite, look at the beautiful premium. Very, very unlikely it's going to reach 125 by options expiration next Friday. But here's your in the money 92.50 call, right? Also really nice premium that you were kind of referring to. And then you're right, a February, for example, and these are just open interest. This is what's just come in for volume today. This isn't an open interest. It's just ironic that I'm looking at the volume of interest that's come in on these plays. And I don't know if they're buying or selling, right? This is just new contracts that have entered in on this issue. And then, there you go. There's an 85 put, which is right about where I talked about this 10-week being, right? So the 10-week is literally 86.55, and that put is $3 and change. So, I'm watching it. Let's just put it that all of those have started to solve.
Well, they're getting expensive. They're getting expensive, aren't they, Samantha? So there was at one point where I was really kind of bullish Amazon, and I was kind of going,
Sorry about that. I think we ran out of memory again. Hold on.
Introducing
Have entered in on
for 575 and then maybe sold an 80 for a couple bucks or a 75 for $1.20, $1.25 if you could get it. Now, you've got a little bit more hedge value there, still not inexpensive. So I would say, on a name like this, I would not get bearish necessarily. Your point is well taken. We had all of those names down this week. Maybe this is a turning point in names that have done that well. So I would sort of get in there. Volatility's high. You are facing the prospect. If you sell a covered call, you're facing the potential for the report to be fantastic. And anything can happen on a chart like that. I mean, there may be a whole bunch of people with the same idea thinking, boy, this has gone too far. And then who knows, it jumps another 20 bucks. I mean, anything can happen.
It's interesting that you're talking about these option tactics. This happens to be a December 125 call, which is quite, look at the beautiful premium. Very, very unlikely it's going to reach 125 by options expiration next Friday. But here's your in the money 92.50 call, right? Also really nice premium that you were kind of referring to. And then you're right, a February, for example, and these are just open interest. This is what's just come in for volume today. This isn't an open interest. It's just ironic that I'm looking at the volume of interest that's come in on these plays. And I don't know if they're buying or selling, right? This is just new contracts that have entered in on this issue. And then, there you go. There's an 85 put, which is right about where I talked about this 10-week being, right? So the 10-week is literally 86.55, and that put is $3 and change. So I'm watching it. Let's just put it that all of those have started to solve.
Well, they're getting expensive. They're getting expensive, aren't they, Samantha? So there was at one point where I was really kind of bullish Amazon, and I was kind of going, I put out a video on it, and I said, Amazon really doesn't trade much more expensive than Walmart. And I said, this is the name I want, in my view. I just thought, Walmart's just had too much of a run. And in that time, not that I'm like Mr. Crystal Ball, but it sometimes just comes down to just plain logic. Where is your torque gonna be? And in that time, Walmart hasn't moved, and Amazon's up 12%. So it ended up being a good choice and a good kind of pair trade there. But we have gotten to that point in markets where I think fund managers out there who've held something like UAL and some of these sort of plays that have gone parabolic. I mean, sort of stocks that are not supposed to be all that exciting have gone parabolic, and they have to be looking at these things going, wow, maybe there's somewhere better to deploy my money. So there's that, right? That's the market for you, right?
And they're
Yeah.
not deploying it in the safety of XLV, for example, which has a huge headwind of big changes in the healthcare sector, biopharma space. They're not deploying it in energy. This is just a sideways grind. They're not, XLF has already run its incredible course, and the yield curve is still cheap and steep, but it's definitely participated with the Qs. But I definitely want to kind of call that out, that Eli was a concentration risk up until that July big shake and bake. It recovered, and now it's toying with staying under 800 again. Again, big changes coming in with new policies at Health and Human Services could have a big impact on some of these stocks. So yeah, they're
Utilities
not
aren't safe either, right? Utilities, are they? I don't know if you can hide
it depends on the
utilities.
utility. It depends. They're
Yeah.
coming back in as well, but that's what I mean by this concentration risk is a source of funds away from the defensive plays. So that's all I wanted to say is correct. Even utilities are coming and softening with the others. So right now we're in a sweet spot. We've talked about it so far. We'll see what next week brings, which is options expiration. We'll be back here on Wednesday after the close at 4 o'clock. Again, we'll figure it out, right? We'll see what.
Yeah, so yeah, Samantha wasn't feeling well today, so she's not gonna have one. Man, I was curious to hear what she had to say about what all that transpired. We got a lot of stuff that happened. But I would say right now, okay, like looking at the chart here. So I'm gonna close this out. Look at that. Look at how perfect it is. You had this top made in October, right? 17th. That was the local top. Drop into just before elections, right? Halloween. Pop up, bounce there, pop up, and then we go back right here. So this 586 level. So this probably cleared out a lot of options into Friday. And then we'll see what happens on Monday, the 23rd. All right, we'll see what happens there. But from then on, yeah, it's just going to go into New Year's. We'll have to see. So I'm seeing some interesting things. I think that like the high flyers, the stocks that have won, yeah, they're going to get pained. They're going to get a lot of pain. But there might be new buyers coming in. So that's why I said like hold on into expirations. Man, I see a lot of opportunities here. Like we see a firm AFRM, right? We struggled right at the resistance, then we dropped. Man, this might be a great opportunity into January if it drops further. I don't know. Upstart, same thing, right? Now we're back at the support. It's a little bit different. Now we're back at the 72 area. Is it a good time to buy for this one? 4. Yeah, so a lot of these things now we're just below here. 4 FOUR below 101. Yes, so there's a lot of stuff right now that I'm just like, damn, is this a time to jump back in? I mean, I don't know about the SoundCloud. This thing is just too strong, right? And we got RX right back where below this area. This might be another time to buy. Could be below the 630 area. Yeah, so there's a lot of stuff where you kind of consider, and right now, like, yeah, so S&P is trying to struggle on the futures. I don't know how it's going to do tomorrow, but right now with the SOXX, I believe like Micron has failed to deliver, which is not a surprise. Micron's failed to deliver. So SOXL, the leverage one, is down 2%. So let's see. So it's about 27 again. It's probably around here. Yeah, it was already touching there before. So let's see. Let's see how this goes. But obviously, I'm not too optimistic until I get through Monday. I'm not gonna say, but a lot of the Bitcoin stuff are rising right now because I think Bitcoin will be like the leading indicator. It'll be because it's bouncing off that near 100 level again. Like if it starts going back up to 105 in the next coming days, it's just like, oh boy, do I have to really buy back in? Yes, you probably have to because everything is really cheap again. Like MSTR, we're right back to where it was like about in December 10th. And if you bought way back when in Thanksgiving, yeah, that was a good price too. So it was touching that Thanksgiving price, and it's just like, oh, shoot. Okay, another ride on this thing, another ride on an MSTR, and if you're leverage, use MXTU. Yeah, yeah, hard to say. It's really hard to say, but I'm willing to do it. I'm willing to do it if I get the signs, if I get the right signs on Friday, and then Monday I'll probably add, and then we'll go into New Year's and just do that. Okay? Because like I said, I see AOI still green for the day. It touched that resistance, yeah. But it's down. Let's look at this other chart for AOI. AOI here. Yeah, okay. Let me see. Yeah, the real resistance is 44.83 cents right there. We got another one at 37. Okay. Yeah, let's see. I mean, there's a lot of opportunities. Man, there's a lot of opportunities in this. And VTS still green though. Yeah, like ooh. Yeah, I might buy in. I might buy back in on this stuff. I don't know. Because I was expecting a lot better, more optimistic tone today, but it's not. It's really not. So I'm still cautious. But man, I think I'll buy Monday. You know, you gotta watch this stuff till Monday. You really do. You might get a really good bargain because the SPY right now doing this thing. Man, it's doing this thing right here on this level. That's a perfect hit. Like if you had to drop from here, you're going to 549, 543 area on this SPY. Okay. Like this is a perfect hit to keep going. So let me see what the yeah, you damaged a lot of momentum here. I mean, that's not really a big surprise. Okay, because you got the options expiration. Yeah, you have to really kill all that stuff. But from the weekly, yeah, this thing's still okay. If it can hold that level, yeah, it's still okay. Yeah. So we'll see what next quarter brings. I don't know, man. This thing. But I think the problem is you gotta watch the bonds. You don't want this TLT. Oh yeah, this chart looks terrible right now. Yeah, from the weekly's perspective. Because of last week and it's doing this thing now this week. Ugh. Okay. Well, yeah, you got to look at gold, silver, small caps, IWM. IWM, you see this? I don't like that because it's kind of the same thing that happened in 2021. You do this and you break down. Like, I'm not going to be bullish for next year. Definitely not. Okay. But this might change. I'm not going to say it's all like gonna give up, but yeah, this does not look good. Like this whole thing, XBI, the most aggressive of the growth sectors of SP. So for today, I just temporarily said like, okay, I'm just gonna dump everything into growth and see what happens. Okay, for my 401k. I'm just gonna be because like from what I'm looking at sound, like it's up 4% right now after hours. So yeah, if you look at some of this stuff, you're kind of like, yeah, you're getting mixed signals. You're kind of like, wait a minute. If you're really gonna be down, that's why Nova right here. Nova right here. Oof. 3.6. So it's down 13.81% today. Damn. I'm looking at it to buy back in. Yeah. I mean, I didn't play too much of this before. I don't know if I want to get aggressive because it's just before the New Year's. I mean, this is where you would really look for crappy stocks, really bad performing stocks. And you look at that like Nova, you're just like, oh shoot, should I just really get? So Charge Point was up like 9% before Powell started talking. Look at that. It's down back at like $1.16. It had a low of $1.05. Yeah, stocks like these, yeah, they're very attractive for the next year because they could get a really reflexive bounce. Like Asan right now, you see it has to get through 28 to 32. It barely got up to like 27 and had to pull back. So I'm looking at that. So you guys, yeah, you guys can watch these with me. There's a lot of opportunity in case we do a flip. Because right now, I think Powell is just going to be expected to do 2 cuts next year. Just 2 cuts. So let me check the Fed Watch tool right now. Yeah, it's very yeah, pretty much it's pretty much just like betting on 2 cuts. So let me double check this. Let's see. We got 4250. Yeah, I mean the market's probably just didn't do 1 cut. That's what it is. I think based on what the futures are saying, yeah. So it should be like pretty easy to beat that kind of projection right now. Okay. Let me see. So look at the futures. Yeah, I'm gonna have to get back to you on this. So all the stocks I've been mentioned this week. Let's see. Yeah, probably a lot of opportunity in coming days, I think, into Monday. So if I see anything worthwhile, okay, I'll go long on. Otherwise, no. I'm staying sidelines. I don't care. But for now, I think for the whole opportunity, yeah, I had to take it. I had to take some of it for my 401k. So I took it out of the cash position from 2 weeks ago. I said like, all right, let me do a kill shot right here. It's so damn low, right at support. I'll just take a chance. I'll just take a shot, and I'm just gonna be more aggressive this time and do calls. I mean, mutual funds on. Yeah, I can't do calls on there. On growth, large cap, and small cap. So that's what I'm gonna do. I'm gonna do that. We'll see how that works out. Now, for the rest of my portfolio, I'm gonna wait till Monday, but maybe Friday will give me some opportunities. But like I expect tomorrow, yeah, it shouldn't be. I mean, I don't know. Unless something changes, I don't think so. In the morning with some more data with employment. Yeah, I don't think there's anything coming out that will change things. And expect China to take a hit. I think you should expect China to get cheaper overnight. Okay, guys. So any of you waiting on Chinese stocks, yeah, you'll get a better chance tomorrow for sure after the overnight reaction. Oh yeah, so tomorrow we get GDP growth. Okay, that's what I see. So you get the GDP, and then Friday we got the PCE. I don't think that's going to be interesting because I think that's you already got the PPI, CPI last week. You already know what's going to happen, and then you'll get the consumer sentiment. That's it, and that's the end of it. Yeah. And this is just basically Christmas into New Year. So there's really not much left. Really not much left to bank on right now. So I gotta wait. I gotta wait till Monday. I think I gotta wait till Monday to figure this any kind of move right now. Otherwise, I'm just staying in cash and being chill. So let me look at SMCI. So I've been waiting for this. It's still stuck in this range, and after Powell, yeah, it's back to 32. Yeah, I can't recommend it either now. Damn, if it wasn't for Powell and just kept touching this 35, yeah, I would do it. But otherwise, no. I can't do SMCI or SMCX. Oh man. Yeah, this is disappointing. So yeah, there's no really easy any trades. Yeah, there's no easy trades right now that I can recommend. Yeah, everything's been done. Everything's been done. So all we can do right now is just try to get stuff cheaper. And unless you want to do quantum computing. Yeah, I mean, oh man, I'm not touching that stuff. Come on. Yeah, QUBT is down 13% now. Yeah, after hours or whatever. Doesn't mean anything. That's just how it is. But yeah, it's already up like 50. Well, this week is up 283%. So yeah, there you go. Right after breaking out. So, I mean, what can you say? I'm not going to say nothing about that. So yeah, we got to wait till next week. We got to see. I'm not going to do nothing. I'm just going to chill. Still chill. I don't like this move though. IWM, you know me. Talk about IWM. I'm like, since Thanksgiving, it's been going down, 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 and it broke down finally. And you're like, nope. I can't be optimistic. But I did buy in my 401k just because it hit like a lot of this stuff, like IWM, like 219. That's support. You look at SPY, 586. That's pretty much support right here. That's the last top we made pre-elections. So that's a significant area, right? That's it. So we pretty much hit that. So if you wanted to buy at any point, yeah, go for it. I think yeah, that's worth a shot. But does it mean it can recover all the way through before New Year's? No. I think you're gonna have to require the whole New Year's because the way the bonds are going, looking at this, now it's below 89.60. That is not good. And XBI itself below 94, 96. Long way from its 105 in elections. It's like, bro. I don't feel good taking any chances on stocks with that. Okay? That's all I got to say. So, we'll revisit all these things tomorrow or Friday, depending if anything interesting goes. And I would say also like weed stocks. So MSOS ETF, there's some weed stocks that this ETF tracks US weed, okay, not Canadian weed, MSOS. And then you have MSOX, which is I think 2x leverage of MSOS. I'm watching this for New Year's. Maybe it will have a quick bounce. That could be a good trade too. Something there. But otherwise, yeah, you can look at space stocks like this, Rocket Lab, Lunar. So a lot of this stuff will get hurt. And maybe it gives you an opportunity. But today, UNG, like Gasolina, still doing fine. Natural gas. Apparently, I can't short this one. Still doing fine. So I got to wait on that too tomorrow for the Henry Hub report. But yeah, gasoline, UNG, you can use UNG unless you do the futures with RBOB, RBOB. So you can look at RBOB. Yeah, maybe if you do futures, you can do that with RBOB. I think there's a RBOB mini. So anybody, if you don't have enough money, there's a mini version of it. So that's fine. Otherwise, yeah. Don't worry. I don't see anything worth getting right now. Okay. So I'll get back to you tomorrow, Thursday, basically, or Friday, Monday. So I think I gotta wait till Monday though, if I see anything interesting. That's about it. I don't think there's any other video I had to play. I think I played everything. I had to, yeah. AI with Tesla, the stuff with that. Yeah. I played everything. Okay. So I'll end this now. This 3 hours, 30 minutes. Okay. And you got the donation. Porsche J, PORSHAJAYE. All right.
Feel like I should, feel like I should, feel like I should, feel like I should go. Go. Feel like I should go. Feel like I should, feel like I should, feel like I should, feel like I should go. Feel like I should go. Feel like I should, feel like I should, feel like I should, feel like I should. Feel like I should go.